Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream.
Good morning, everybody. Welcome back to another live stream, a big one today. We have the non-farm payroll data coming in the next 15 minutes or so. I still have a couple positions on that I'll be talking about in this live stream, and I'm going to try and just keep my P&L on the screen during the NFP event. You can watch me get all of my silver profits either taken away or added to. I am in this swing trade for, I guess this is going on a couple days now. It's not been a long held position, but I do have a position going on into NFP that I won't be closing ahead of time. People sometimes ask, Nick, do you close trades before major news events? And the answer is, how can you nowadays? By that logic, you would be closing everything after like 30 seconds because there is a new headline coming out of Iran, coming out of economic data every 30 seconds. I'm a swing trader, so I very often hold positions through data releases. And so, sometimes that helps my positions, sometimes it hurts my positions. And I can't predict what's going to happen with that NFP. So although I am showing you that I have a long silver position going into the non-farm payroll report, please understand I have no idea if silver is going to collapse or rip higher on NFP because I can't predict what the jobs data is actually going to be. In fact, what we can do is at least look at what forecasts are for. But what are forecasts? They are forecasts. They are not certainties of what the data will be. So if you're going to, one thing you'll see across social media whenever you see these non-farm payroll streams, people saying, oh, gold's going to go up, gold's going to go down, dollar's going to do this, dollar's going to do that. Nobody actually knows. And if you make any trading decisions off of comments that you see, please, learn from your mistakes because it is very easy to do. You see somebody very confident about what price is going to do, and nobody knows what's going to happen with the non-farm number. Okay, we are forecasted today to have 85,000 jobs added to the economy print. That is the non-farm employment change number forecasted for the month of May. We get May's data here today, first Friday of June. Unemployment rate is expected to stay put at 4.3%. Average hourly earnings expected to rise by 0.3% month over month. And then we also get some Canadian jobs numbers as well. This week has been a pretty strong one for U.S. economic data. PMIs were strong. JOLTS job openings were strong. I'm trying to think of other numbers off the top of my head, but I can also just pull it up. In fact, dollar has been part of the reason I'm quite bearish on the precious metals is due to the strength that we've been seeing in the dollar. Now, again, I want to disclaim something could change today, right? I don't know the future. So right now, all I can do as a trader is I can operate off of the data and the price action that we have right now. I can't predict with certainty what it's going to look like a day, 2 days, 3 days from now. So instead, as a trader, my goal is to be reactive, adaptive, and open-minded to something changing. So today we have the non-farm employment change number, which could drastically improve or worsen the scenario for our scoring within Edgefinder's macro screeners. So if you're newer to my channel, I use Edgefinder to help me track economic growth metrics, inflation metrics, jobs market data, and then we track what institutions are doing through the commitment of traders data. And we also track crowd sentiment through put call ratio and broker posted positionings for currencies. So, Nick, are you bullish on the dollar? Yes. You see it on my screen right here. US dollar, I am bullish on it. Now, again, NFP could stunt that bullishness, or it could continue to support the bullish case. Right now, we do have dollar a little bit softer on the day, and we'll see what NFP brings us. If you get better than expected jobs numbers, perhaps that's what we need here to continue the march higher in DXY. However, if you get a soft print on jobs, then we very well could see dollar index back down to the bottom end of this range. They might be saying, so which way is it going to go? Where are we? What are we trading? Again, I'm not here to tell you what to trade. However, my goal is to be reactive, not trying to be predictive. So with the dollar, I am bullish on the dollar. I have bullish positioning on the dollar. I am short British pound dollar. I am short silver, which is sort of a proxy bullishness on the dollar. It's not perfect, but it is one way to reflect bullishness on the dollar. And so I am looking for price action, even if NFP, causes a down move. I'm generally looking for price to continue to push through these highs. If that takes place, I will stay in the positions that I'm in, and I'll continue to try and make those or hold those into bigger winners. If something in the data shows the jobs market is suddenly drastically more weak than expected, then in that case, I may, if price action confirms the idea and starts to fall down, then I need to get out of my positions. It's as simple as that, right? I don't know where NFP numbers are going to fall. Generally, economic data for the US has been stronger than anticipated in recent weeks. So my bias on the dollar is bullish, but it's not certainly bullish, right? And there's a big difference. I know I make this distinction over and over. It's for beginners. Beginners who are newer to trading don't understand that good trading does not mean you know where price action is going to go every day. Good trading means you make educated guesses and you manage your downside risk and you maximize when you're right. That's it. So right now, if jobs numbers come in meaningfully softer than expected, we just covered that we're expecting 85,000 jobs added to the U.S. economy, right? And I'll leave this up here. You guys can watch my silver trade, which is going to drastically move on this, right? Because if you have silver, or if you have jobs numbers that are strong, it's going to be bearish for silver, which would be good for my short position. And I guess this doesn't show, I just realized this doesn't show that this is a silver short position. It just says SLV Silver Trust, which I need to play around with this widget, see if I can get it to show that it is in fact a short position. We're about 5 minutes out here before the non-farm payroll event, guys. This trade is one that, of course, I'm going to watch closely as we go into it. At the same time, we have the Nasdaq pulling back here. A little bit of pressure in the semiconductors world. If I just pull up SMH, a little bit of downside going on in semis here, down 2.7% today. The Dow Jones still sitting at all-time highs. S&P 500 just slightly off its all-time highs. Again, back to the dollar for just a second. We are sitting in this range, wondering if we can break higher. If you're watching the Bitcoin chart, man, my goodness, this thing is in free fall right now. Just cannot seem to find a bottom. And that's one of the most aggressive daily chart sell-offs that we have seen in Bitcoin since the major crashing that was going on at the beginning of the year into last year. We are back down to our lows here, guys. Bitcoin is just about at almost under 60,000 again, which is unbelievable. And it's got to be, I mean, it's a frustrating environment for the crypto crowd. You're talking about being at the same price levels of April of 2021. You could have gone to sleep for 5 years, woken up and had the same amount of capital, except inflation eroded half of it. Like, it's a tough environment for crypto. And half is a bit of an exaggeration, but only a bit of one. Like, inflation has been rough in the last 5-6 years due to all the pandemic, wars, etc. Inflation has been a tough environment. So Bitcoin being flat, inflation adjusted, is really, really poor performance. So anyways, maybe things turn around there. VIX is up a little bit here this morning. We have about 4 minutes to go before we get the jobs number coming in. I'm going to go ahead and switch over here to our all markets view just so we can keep an eye on a lot of different charts. So these are going to be 1 hour charts on your screen. I'm going to, what am I going to do? I'm going to do this. I'm just going to put my silver trade here. So again, you can watch my P&L as it either drops or pops on the number. Again, I want to clarify that I don't make any sort of prediction. Oh, NFP is going to do this, right? I don't do that because I think that that is more gambling than people realize. We don't know what the jobs numbers are going to be. And a lot of people put in a ton of work, talent, effort, money into trying to predict these numbers, and they still don't get it right all the time. So for me, as one guy, I'm not going to try to predict the jobs number. Instead, I'm going to try to ride possible trends that the jobs number then generates. Does that make sense? So if jobs numbers come in way stronger than expected and the dollar starts ripping again, there may be some opportunities there. Vice versa. If the jobs number comes in way weaker than expected, it could generate some trends that start to create the dollar maybe moving downside, or S&P 500. That one's actually kind of tricky. Is the S&P 500 up or down after a solid jobs number? Sounds, you would immediately think, oh, it's going to be good. Well, we're already talking about rate hikes. If you get the jobs market starting to like roar, like really go hard, meaning strong, it would actually be a challenge to stocks simply because interest rates might have to go up. So it's complicated, I would say. And it's actually, to be completely honest, I don't actually know exactly how the market would react to really strong or really weak jobs numbers for S&P. Obviously, I could tell you with dollar, it's pretty clear. If you have a very solid report, the dollar's going higher. Gold is going lower. Silver is going lower. If you have a very solid, like outstanding jobs report, that's what's going to happen. Stocks, harder, right? Stocks are more challenging because I don't know. If you have a really solid jobs number, it's like, hey, hiring is strong, economy strong, that's good. But the Fed is going to not cut interest rates, keeping some of that rate hike concerns on the rise again. That's bad for stocks. So 6-7, I don't know. It's actually kind of hard. Personally, I lean a little bit more in favor of strong jobs, good for the stock market. We shouldn't really need rate cuts or desire to have rate cuts. So I generally prefer to look at that more as a bullish catalyst. If you have strong hiring, it's going to be good for the consumer, good for corporate earnings, etc. So we'll see. We've got just 1 minute to go, guys. We're going to react to the number. Do me a favor. When the number drops, a lot of times people immediately leave the stream. Don't go anywhere, because most of the good stuff actually happens after the drop, where we discuss how the new information could potentially drive new trends. So if you are interested in learning about macro fundamentals, how we can spot trades on this, don't go anywhere. We trade the aftermath. We don't trade the before, right? Trading the before is absolutely, insane, because the spreads go crazy. You're going to give tons of money to the broker trying to do that. So instead, we will be talking about how we can follow through on some of the trends that might show up in the macroeconomic data. I'm so scared. If you're scared, your position sizes are way too big, and you are, I would just issue some caution, right? Nobody knows how price could do all sorts of things. NFP coming out here in just a few seconds. Let's see what we've got. You can watch my silver trade get waxed or helped by it. And let's see. Dollar immediately showing some strength here. That is solid. Stock market's also responding positively. Dollar is making a move. That's a sharp rise in the 1 hour. Let's see if it follows through, because a lot of times you get these NFP reports, and if they are mixed, they are back and forth pretty quickly. Strong NFP, that seems like the context. 172? Brothers and sisters, what in the world? 172,000 jobs added versus 85K expected. Boom. Very nice. That's a solid jobs number. Is that a double? Yeah, it's a double. That's more than a double. And they revised the, whoa, guys, they also revised the previous number up. Okay, so we're hiring out there now. Hiring is coming back. People are going to hate this. Every time we get a good jobs number or a bad jobs number, it's like you see, I'm calling it now. Later when you're on Instagram or on TikTok or something, you're going to scroll, you're going to see some post about the jobs market added this number in the month of May, and go to the comment section immediately. Political fighting like crazy every time, like without fail, whether it's good or bad. People will defend it, people will argue it, people will say the numbers are fake, people will say the numbers are real. Anyways, point being, if the numbers were truly, completely, absolutely falsified, then I think smart investors wouldn't actually, they would drive prices the true way they think. So I think that there is some legitimacy to the jobs number. Even if they are inaccurate, they revise stuff later. Look, they've been revising numbers higher, to the point of a lot of people who have been saying, hey, jobs numbers, they keep revising them lower. Not recently. Recently, they've been revising numbers higher, like jobs numbers showing some health. And again, remember what I said about stocks? Clear and obvious for dollar, not so obvious for stocks, right? Because it's like, hey, good jobs numbers, but inflation is going to stay persistent if you have hiring picking up, right? Hiring, payrolls, wage increases. By the way, did we get average hourly earnings did come in growing in line with expectations. Unemployment rate stayed as expected, 4.3%. So what does this mean for interest rates? Yeah, so that's where we're going, right? Interest rates elevated is likely to stay the case. By the way, there's a silver trade still holding tight to that one. We look good for now on that side of things. Let me just really quick switch this over here. Where's my Nasdaq's actually taking lows now. Silver, nice little move there on that side. Anyways, there's a silver trade. For now, we'll stay in it. Looks okay. In just a second, we'll bring in Chris Pulver to the conversation, see what he has to do. I haven't spoken with him for a minute, so it'll be nice to hear his thoughts on today's jobs report number. Meanwhile, guys, this silver trade, I have been trying to do this here recently. We're trying to be incredibly transparent about positions that we're in, things that we're doing in markets. If you are interested in signing up for our VIP signals and getting the trades that we are taking when we take them, then consider joining us inside of the Discord. We'll drop a link here in the chat to where you can speak to our team. If you are interested in getting notified, let me just show you really quick what this looks like. Give me a second here. Basically, all positions being shared inside of the Discord. So if that's something that you're interested in, like I took this silver trade, I'm trying to stay, fully up to date, transparent, both on the streams, videos, etc., on trades that I'm taking. If you would like to get notified every time I take a position, or if you're familiar with my friend Chris, who just arrived. Hey, Chris, how are you?
What's up? Happy Friday.
Happy Friday. Then we also have his trade alerts available inside of the Discord as well. So if you're looking to trade alongside experienced market veterans, then consider joining us. We are currently doing a huge discount on that. We're doing 40% off memberships. And for stream viewers here during NFP Day, send us a message using the link that has just been dropped in the chat to get 45% off our VIP trade alerts. And come trade the markets with us. Anyways, Chris, markets reacting kind of interestingly today. I was saying, I don't know if you caught me saying this when you were just joining, but I was saying that if you get a solid jobs number, I don't even know how the stock market reacts. What are your thoughts?
Well, I think that right now what we're seeing is the reality of a 9-week win streak. I think that it's just hard to hang on to it. I mean, it's happened 4 times in the history of the stock market. The longest in history is 12 weeks. Looks like today is looking a little bit more difficult to break that 10-week, which last week's close was 7580. I've been watching it all week. I actually traded around it. Took profit on a trade yesterday that was a little broken wing butterfly. I pulled in like $400. I closed out for $300, not taking the risk, and I'm glad that I did, because yesterday we came all the way back up to test 7,600. I'm like, well, pretty perfect that we're coming into non-farm payroll around that break-even handle, because we were closing yesterday at like 75.84. And then, of course, pre-market, we slip in. I looked at the news. Great beat on the news. But I heard you saying, like, if people are taking this like, oh, this isn't real, this is fake number. Maybe it is. But more importantly is, what is price doing right now? Yep. And price is down to 70 feet. Interested in watching. Just like yesterday, if the market opens lower and immediately catches a 0 DT bid, do we end up just kind of rallying back up for the day, similar to what we did yesterday? Yesterday was a really slippery day. We opened up at 75.15, rally all the way up to 7,600, and here we are, just like slipping right back below where we had nearly the lows yesterday. So I'm going to keep an eye on this. If there's some bid in the market when we come into opening bell around 75.30 to 7,500 zone, then the market's going to still fight back. But if we give some of it back, Nick, I mean, all I did was drag a fib from low to high in futures, drag a fib from low to high in Nasdaq futures. I mean, we're due for a pause at the very least. We're due for a pause. Do I think this is the top? No. I think this is an opportunity to see, maybe the VIX go up a little bit, maybe sell some more premium, get some respectable levels in here. If the market pulls back to recent all-time highs, I'm still going to take an opportunity to see if that structure wants to hold for a bid. What do you think is this the top, Nick? Is this your top? Is this, it's just it's too popular to say like, this is the bubble. Everyone thinks it's the top. SpaceX is going to be a bust. And I'm a little bit more contrarian when it comes to stuff like that.
I have to say the headline yesterday that I would not have expected to cause, and maybe this wasn't the headline, maybe I'm reading this wrong, but the not allowing SpaceX admission into the S&P 500 news that dropped last night, it coincided with a drop in the stock market, which I thought was really interesting. It kind of showed, like, in my mind, it's like what you said, when you're on this kind of win streak, nothing can go wrong. Not a single, like, you can't have, red lights going up at all, because, again, you've got so much euphoria, so much enthusiasm. SpaceX stuff, I think a lot of people have been trying to front run that. And so maybe the news there about IPOs potentially getting kind of pushed back before they can join the index, that might just be enough in the short term to cool some of the absolute euphoria, and maybe wake up. In my mind, I think the market is sort of undermining or underestimating the potential of oil continuing to stay at elevated levels, interest rates generally just on the rise here. I mean, Chris, Bitcoin, Nasdaq is just, the comparison of that chart is just absolutely like abysmal. It's so frustrating here for the crypto crowd. Inflation adjusted, you're talking about holding it since April 2021 to today. No gains on an absolute price return basis, and significant losses when factored in for inflation. Like, it's an unbelievable. Now, if you were crafty with it, if you built positions over time and lower levels, then that's a different story. But I just point that out because here is something that is saying something starkly different than the NASDAQ, right? The NASDAQ just up and to the right. Meanwhile, Bitcoin down into the ground, basically. Just an interesting thought.
Bitcoin, we saw this. I mean, when it started to really roll over aggressively last year, there was liquidity concerns. The altcoin space was really taking a beating, and also the financial engineering that was going on with, like, taking a Bitcoin like a Michael Saylor and putting in, MicroStrategy, which is basically a levered proxy, putting in, Stretch, which is like, we're going to do 11% returns. Nothing is risk-free. I mean, if you have a risk-free rate of 3.7 to 4% right now, if you want to hold bonds or treasuries or some type of short-term yield mix, that's risk-free. Like, risk-free is around 4% right now. Yeah. Anything above that, so Stretch at 11.75%, it's risk. There's risk in that, and it's like, right now the big headlines on Bitcoin is Michael Saylor selling his Bitcoin. Well, I mean, he kind of has to, because it's trading below net asset value. Yeah, the chart looks like crap. It really does. And I mean, we had talked about the technicals of Bitcoin to potentially come back down. I mean, I'm looking at a level that's as low as like $30,000 on Bitcoin. I do have a symmetry level marked out. So if we have high to low, lower high to lower low, you know, it really be this swing here. So if we did a swing and I took even symmetry here, that we're talking like $30,000, and you know, nobody's going to enjoy that move. And here's the real tell: are we breaking below 60K? Or are we going to bounce right back up because of how inefficiently this last little leg was from 75 down to 61? I don't know, but look, man, there's nothing good in price action right now in Bitcoin. I mean, a lot of option prices are also starting to show more bearish tilt, and I'm sure there's going to be people piling into that. I mean, if it gets beat up pretty badly, I still look at all this in Bitcoin as a trade. I would still consider this a trade and not the end all be all, like Bitcoin is the greatest thing in the world. I have no idea, man. I mean, from day one, I said it's risk capital. It's still risk capital.
Yes.
And nobody knows the future on anything that's going to be Bitcoin or SpaceX or the markets or the top. It's like all you can do is manage risk and just try to survive. Because if this gets really ugly and goes to zero, well, the smart Bitcoin bulls that maybe made some money probably lost it all.
Right.
You know, but it's like when you have BlackRock and Fidelity and JP Morgan and some of the biggest institutions in the world that still have exposure to crypto and Bitcoin, it's like, well, I think there's still some credibility there. It's just, price action is not supporting.
That's what I was going to ask you is this is not a small asset. It's like top 15 still after all the selling. It's like top 15 largest asset in the world.
Yep.
And the point I'm bringing up with that is, okay, you have this giant, giant product, this giant asset with tons of interest in it. And yet it is, I don't know what's going on my charts here. They're loading slow today. But you have this situation in which, okay, there's probably some forced selling that is going on. But the question is Bitcoin sick? Is it diseased? Or is the Nasdaq ignoring something? Or is it a combination of the two? Is it just purely that Nasdaq is excited about, the AI stuff and Bitcoin is not necessarily a beneficiary of that? It is risk capital in the sense that, we've talked about it always on the show as it's a risk on asset, right? It typically does well when stocks are up, but why I've been so, kind of frustrated on behalf of the crypto crowd. I don't own any Bitcoin, but on the Bitcoin side of things, it's like, where's the alpha? The alpha generation in an up Nasdaq market, the theory, historically speaking, has been Nasdaq's up 10% for the year, Bitcoin's up 30, right? We're just not seeing that. And it's got to be a frustrating environment here for the crypto crowd. Maybe that changes, right? If it wants to make its gains, we know how quick it can be, right? It could bottom out at some point and just, do one of its crazy runs. But
the catch-up trade can be insane. I mean, and when does it have the fastest catch-up trade? When it's probably hated the most. When everyone thinks it's going to zero, when everyone thinks it's the worst trade ever, and people are idiots for holding it, and it's like, and all of a sudden we're talking 120K Bitcoin again. It's like that can happen. But I mean, think about just the number of stocks in the last 30 to 45 days that have reached a triple-digit run. I mean, I just saw today there's only 20% of fund managers that are outperforming the benchmarks, and I can see why, because you have to have a huge position in some of these high-flying stocks, and it's like, okay, man, you're picking 20 stocks in the entire stock market to run. And those are, top 10 recovery with the Mag 7. And then you throw in Dell, SanDisk, Micron, what the hell else? AMD was having a runner there. You throw in HP or HPE, you throw in Intel. It's like all these things that have been handpicked by Trump and handpicked by Jensen Huang. And that's been exciting, but it's like, I'm not building my portfolio that way. You and I have talked about it offline. It's like,
and I don't think that lasts forever either.
No, it absolutely doesn't. But it's what all the hype is right now. It's like, wow, how easy is it to pick stocks? It's freaking not. It's not easy to pick stocks. And if it is easy to pick stocks, and if it is easy to pick stocks, then what's going to happen is people thinking that if a stock like Dell, which is up 300% since February, the chances of this thing doubling again, I mean, if I can make that bet, that would be my bet. It's like, it's not going to double again. But I can't build that trade when the Ivy rank is over 100.
Right.
So there's no structure for me to build this. And also at the same time, if we let the wind out of the sails of this run, it's like, I'm not even positive that this is a good trade to go back up to the highs. I feel like once this thing is popping, and I'm not referring to pop like a bubble. I'm just saying once this thing is deflating a little bit, it's like there might be no interest in this doing anything else other than now we go sideways. You know what happened? That did it in gold, we did it in silver, we did it in oil. It's like all the run, all the pullback, and then it goes nowhere. And like I don't want to chase this stuff because I admit I missed a lot of it. And that's okay.
For sure, same.
But I'm still up and I'm still gaining and I'm still moving the needle. But it's like I'm not going to chase this stuff and see a big up move and a big down move and then go sideways. And everyone's like, it's going to the moon? Question mark. But it doesn't. It just chops around and all of a sudden it's out of favor all of a sudden.
Sure. Yeah. No. And I think Chris, with the semiconductors world, all that stuff, I kind of lean in the favor of thinking this is closer to a top than not. You know, I think that
a rotation top, in my opinion. I think it's a rotation top, not like top.
I agree. Yes. Like I'm thinking you could very, very, very easily see, you know, a couple months of sideways down pullback, a little bit of a reset on the semiconductors world. And maybe, you see rotation into some of the absolutely hated markets like healthcares and other, you know, parts that have just been struggling. So I kind of tend to think that is more the likely scenario. And if we draw some fibs here on SMH, you know, a 38.2% retracement. This is a 16%, 17% pullback in semis, which sounds like a big percentage number. It's not. If you look at historically speaking, pullbacks in semis range from like 15 to 30. I was looking at this the other day. Like very, very commonly when you get the pullbacks in semis, you know, these are 30% pullbacks. That's a 17% pullback. Like if you're looking at this one, which is kind of a mild one, still a 16% pullback. And then obviously if you get an actual market turn, they get way uglier, right? 50%, 60%. So semis are, one of the biggest things that kind of makes me nervous about semiconductors right now is people speaking about them as if they are no longer cyclical. And that to me is like super risk territory because they are cyclical in the sense that like memory is the hype story right now. A lot of people very excited about memory, you know, chips like Micron, et cetera. But there's one headline away from finding ways to be more efficient on the way memory and on these technologies work that could drastically reduce the forward kind of earnings for these types of companies. They're up so much on projected earnings that could shift if technologies even mildly change. So, you know, I just, with the semis, I think they are a great risk reward bet on pullbacks, but I don't think that they're a very good one, you know, in the stratospheric level.
Yeah, I think they're great defined risk trades. In fact, you might see them pop up in my alerts because if we get a pullback, let's just say SMH, and this could be on any individual stock as well. Like, I mean, one thing that's really kind of special and fortunate for traders this year is like, if you listen to what Jensen Huang says, stocks are moving on his word. If you're listening to what Donald Trump and the government are doing, stocks are moving on their word. So, you know, HPE and Dell and Intel and Marvell Technologies had a huge jump in 3 days. So that's MRVL. I mean, these are ridiculous runs. Now, I take a move like SMH if you want to trade like the basket for semiconductors or SOXX. I mean, a defined risk trade looks like this. Let's say we pull back to the 30 or 38%. I would give this trade probably 30 to 45 days or 30 to 60 days to see if it bounces, goes back up to retest the highs. And if it does that, that is a low risk trade that I could take for maybe like a 1-to-1, and I could peel off profits anytime I want if I'm right in the direction. But I need price to basically cross my line in the sand to get paid. So rather than chasing this for like the next euphoric run or the next, you know, parabolic run, it's like, what if I can just take a defined risk option trade, you know, get 120% return on risk, and I can do that for a couple $1,000. Like that would be fine. And I wouldn't feel like a fool for missing a lot of this move outside of what I had, which is a bunch of naked puts and a bunch of premium that I'm collecting income on, but I didn't get any of that like crazy, you know, call option volume. That's just like people are millionaires now because they just went all in on semiconductors. It's like, good for you guys, whoever that is, the small percentage of traders that did it. There's probably tons that are going to, you know, blow up accounts by missing this or trying to chase this stuff.
Late to it,
yeah, exactly.
Chris, another side of things, I am at least at this moment quite bullish on the dollar. I'll give you my elevator pitch here as to why. But if I look across the data that we have recently been seeing, you know, I'm heavy on the macro side, but economic growth PMIs this week were solid. Consumer confidence is still in the gutter in terms of on an absolute basis, but recently has been better than forecast. So I think that short term kind of provides a little bit of uptick in the dollar. Inflation, and this might be arguably the core reason for me, is inflation data has been persistently higher. I think the Fed is going to stay neutral for a while. I think that there's the possibility that they even talk about, well, they are talking about, but I think they could even increase the talk about possible rate hikes.
Yep.
And the jobs market data has been upbeat relative versus expectations here recently. So that leads me, when it's the expression you always use, which is the concept of the least dirty shirt in the laundry basket. That's to me right now is the dollar. I think dollar index from a technical perspective, we've been consolidating here at these levels. We spec up to the top end of this range. And I think that does also lend towards helping out a little bit on giving us a little bit of reprieve, a little bit of pullback in some of the higher risk stuff. So I do tend to be more on the camp of thinking yields could continue their uprise, right? Dollar maintain some strength. Precious metals in the short run, I do actually have a short position open on silver. That's been going pretty well. Long term, I want gold and silver to keep going down so I can build long-term positions, because I'm simultaneously short in the short term and looking for longs in the long term. So that's kind of a synopsis of where I am with the dollar and precious metal side of things. But where are you at with it?
So if you like dollar long, what do you want to play? Like I'm seeing this chart. I've said dollar long for a while, since we had this kind of, there's no such thing as a triple bottom, but since we had support kind of hold around 96 and 96.50, I said the surprise move for the year is going to be if the dollar breaks the 100 handle and we go to 104, 105, that's a surprise follow through on the dollar. Now I can get behind, I will endorse your elevator pitch, Nick. I think that getting in here and going euro dollar short to see if the dollar index will come up and test this level, that's kind of take profit one or moving a stop loss to break even. If we get the measured move to the upside, that's really the surprise trade that I think could be, that'd be where the dollar's getting a lot more attention. Like, oh crap, the dollar is bullish and strong bulls. And it's like, it's not going to really make headlines until it's probably above 101. But I like the structure where if I were to say, I'm going to get dollar long here by maybe shorting euro dollar. If I went entry 1, entry 2, entry 3, I just trade like the big structure lows. And I think that the dollar probably hits this level for target 1. We measure a symmetry move out here, which I already have on my chart, target 2. And I think that's a pretty good looking trade to be long the dollar with probably some, favorable reward to risk. I think that's a good setup.
Yeah. So I'm long the UUP ETF. I'm also short the British pound versus the US dollar. I am short silver. And yeah, that's pretty much my positioning there. I'm also sitting in cash still. So I'm very much positioned in the side of dollar could have some more upside. I've done decently well with the dollar in the last few months, been predominantly trading the long side. And I'm not necessarily saying, with currencies, it's not like stocks where they have this kind of tendency over the long term to continue to drift higher. So I like the way you talk about like potentially looking to scale out, take some profits, measure move, et cetera, type of approach. Because again, like if you're making any sort of long-term calls in the dollar, everyone's been wrong because it's gone nowhere for a couple of months. Like after this, a lot of people probably thought, oh, we're either going to have some giant roar or we're going to have some, follow through crash. And it's like we've talked about with the bonds market, right? Bonds have just gone sideways. They've been super efficient in the options world. Kind of the same thing for the dollar, right? It's just been ranged bound, choppy, gone nowhere. And I do kind of tend to think that the risk here is more to the upside, in the sense that I think like you could have all of this culminating if, for example, if oil rips to 130, 150, I'm not saying I think that happens, but if it does, you're very well looking at a scenario where we have a 2022 like dynamic where the Fed very well might have to do something about a trending higher inflation, and might not want to make the same mistake as the past time where they called it transitory for a long time and had to do, very aggressive rate hikes. So I tend to think for now, subject to change, but right now the dollar looks strong to me.
I do agree. I think that I'm actually going to look at a trade. If I just start to scale in, I'm going to go market order on euro dollar. I'm going to sell the euro dollar. I'll throw this in my poll roller. So I'm going to sell the euro dollar. I'm going to sell it here at current price around 15.95. I will sell it up here again around 18, This high was around 1850. I'll put 1840 or 1845, and I'll even sell it up here at 120.50 or 121. The likelihood is we're probably not coming to 121. I would think that this is probably just going to come down and test these lows. If there's symmetry here on euro dollar, then we go high, low, lower high, lower low, and that's my symmetry. That's my profit target around 1250 to 1200. So if I just take one position and I get this thing all the way down to 1200, there's a 300 to 400 pip move. That's fine. If there's no pullbacks and no pain, easy peasy. But I'm going to kind of scale in because I think that the bigger picture is like, yeah, dollar index would head up to 101. If we break that level, there's a 104 to 105 measured move. I look at euro dollar doing the same thing. So more of a correlation on euro dollar than pound dollar, in my opinion. We might also see it play out against the Aussie, New Zealand, but they tend to have a little bit more commodity structure. And if commodities are hot and oil stays sticky, I think the euro dollar, just the way it's weighted with DXY, I think that might be a cleaner technical trade. So I'm going after that.
Yeah, and I think what I'm gonna do this morning here. We've got 5 minutes on the stream. I think I'm gonna take my stop loss on this silver position that I have, and I think I'm gonna go ahead and trail it in. Just because we are threatening here. We're testing this level again, this 71.9 level. We look solid here to the downside in the short run for silver. And again, there's no emotion attached to this. I love silver and gold for the long term. I've had, you wouldn't believe it, Chris, a lot of people who are the precious metals crowd don't love that I'm short precious metals. It always comes across as like I'm hating on it, but I'm not. I'm just trading the macro right now, which to me is yields higher. And candidly, I'm hopeful for lower precious metals prices because I like to scale into them and build, positioning in them. So, you can look at it two ways. You can look at it as like, oh my gosh, my silver and gold that I chased the hype on in, 2025 is now, crashing. Or you can look at it and saying, hey, maybe this is an opportunity. If you are a true believer in precious metals and having some allocation to them, if you think there's some concern about the national debts globally, we just don't know when that starts to become a story that matters to the markets. You welcome the idea of getting more for your dollars in regards to precious metals if you are, a long-term bull on it. So I don't mind at all. If we see silver back down in the 60s, if we see gold back down in the 3s, I welcome that. That's an opportunity, in my personal opinion, to build positioning on precious metals. And Chris, you are, the king of that when it comes to what you did with gold and silver. I mean, specifically silver, really, over a stretch of time. You built those positions during the lulls of 21, 22, 23, and then, cashed in on this move here and then stepped aside. We felt a little early with some of our exits, but still, these charts don't last. So
yeah, we did okay.
Yeah, we did fine.
Yeah, I'm going to continue to accumulate. I think the one thing with current central banks is we're starting to see a bid resume in the central bank buying world of gold. I think that bid is going to be maintained. I think if there's one thing that we will probably see in the next few years is going to be I don't know, some form of, yes, banks might raise rates to combat inflation and try not to repeat 2021, 2022. But I also think that they're going to be buying gold as a potential, long-term bid. And if they're going to print more money, certainly to print more money to buy stocks, I think things should just get really wild here in the next couple of years. But don't underestimate the AI bid. Don't underestimate the CapEx spending. I mean, Google, they did like some $80 billion raise for all the AI stuff. The circular financing is like mind-boggling. If you're following, Cassandra Unchained is Michael Burry's Twitter handle or Substack, what he's doing now. He still is calling Fugazi on all the AI stuff, which at some point I'm sure, yes, maybe it is. But really quick before we go, I literally have to jump here in 2 minutes, Nick. But thoughts on SpaceX? If we want to talk about it more next week, that's great. But thought on SpaceX so S&P said no, but Nasdaq says come. And Nasdaq is probably going to list it like a couple days after IPO, which is, again, like very aggressive for index to say we're going to have it, we're going to take it. And not only index trading like the Nasdaq, but going into releasing option trading in SpaceX within like 3 days of IPO is pretty nuts. And the markets are essentially kind of bending over backwards to accommodate such a large IPO, which I think what it's going to bring, whether you believe in the IPO, believe in SpaceX or believe in the IPO, I think there's an opportunity to just watch the fireworks, maybe dollar cost average. I think it's if you want to look at a SpaceX as a risk capital trade, hold it for 5 or 10 years and see what happens. If a space economy is really something, then it could be hey, look, I'm going to put, $1,000 to $10,000 in SpaceX and maybe it doubles or triples or whatever it is over the next, 5 or 10 years. That's still a good trade. It's an interesting trade, but I certainly don't want to be chasing the crazy volatility we're probably going to see as this comes out.
I'll be quick just because I know you got to jump. But
Yep.
long story short, with these sorts of things, I think you have to, as traders, we have to detach our understanding of the technologies and our love for the technologies with sentiment and positioning.
Yes.
For years, private investors have been making big money on these IPOs before they get sold to the public.
Yep.
Understand, SpaceX, incredible company. ChatGPT, Gemini, all these technologies are fantastic, but you can still overpay for things. You could be looking at a gorgeous house and say that's worth a lot of money, but you can still overpay for that house if you were to go buy it, right? It's one thing to say whether the technology is amazing or not. I use AI every day, all the time. I don't think AI is hype. I think it's absolutely game changing because I'm seeing it in my small business.
Right.
And so I can only imagine that that's happening across the entire global economy. However, can people still overpay for that stuff? Absolutely. So be careful. I think caution is the way to go with all that stuff, especially with the index rushing them in. Chris, thanks for coming on, man. I won't keep you. Have a great next stream for wherever you're headed off to.
Okay. Thanks. See you soon.
See you, man.
Bye.
Guys, just as we end up with Chris here, we're going to be passing on the show to my good friend, Alan Perez. Don't go anywhere on this because, of course, Alan has his own set of ideas. I believe he is short the euro dollar, or at least he was. I'm not sure if he still is, but we have a very nice thing going. I also just really quick wanted to show you a chart. I prepped it. I wanted to share it with Chris, but he's he's too cool for us. He had to head off to another event. Anyways, this is the volatility index over the 1 month chart with a 36-month moving average. That's a 3-year back moving average. I wanted to show you this because, and Alan's here so he can hear me saying this. You made a post yesterday, Alan. If you guys follow him on Instagram, if you don't, you should. He was talking about how trading has felt kind of sleepy, kind of tired in recent times. And the chart to rule them all in regards to market interest, volatility in all assets, in my view, is the VIX, right? So we have been in actually a downtrend approximately with this moving average for the last couple years in the VIX, right? Early 2020, 2021, 2022, this period of time, I can tell you from all the analytics that we have at A1 Trading, trading interest was much higher. Markets were moving like crazy. And candidly, for good reason, when you have a lot of volatility, you pay the same spread, generally speaking, to get into euro dollar or you get into S&P or Nasdaq or whatever, but the moves are huge. So people like the potential of like paying small amounts to the brokerage with the possibility of getting huge moves pro or against their positions. Volatility just attracts eyes, it attracts attention. And so we've been in this downtrend for a while. And Chris kind of tailed off on something before he had to head off, which was next few years could be interesting. I tend to think so as well. I tend to think we might get a bit of a bid on the volatility index. We've had this kind of never-ending upward chatter in stocks for a while. Volatility has been kept low. Every time you've had major sell-offs, they're immediately met with kind of consolidation and buying to the upside and cool off in the markets. And I think that that's set to eventually change. By the way, silver is absolutely melting. Meanwhile, like what the heck? We've got very nice down 3.6%. Like I said, once I hop off stream, I'm going to go trail stops inside of the VIP room. We took this trade inside of VIP. If you are not in there, join us, man. It is a wonderful time to be in it because things are heating up. Things are starting to move again. And it's a wonderful time to be watching markets and trading alongside a team of professional traders that have track records. If you're interested in a signal service like none other, where we actually show the trades that we are taking on personal capital, why we are entering the trades, we show actual track records that we do what we say we talk about. We're not just showing hype, right? There's a lot of that all over the social media world. We actually show our positions. We show long-term results of our portfolios. It is not a copy and paste service. It is a service where you can see trades that are being taken by real profitable traders with full context breakdowns, what they're thinking, so that you can learn something. You might not trade exactly like me or Marco or other traders inside of here. Chris Pulver, by the way, his alerts are available as well if you're interested in that. But I am very confident if you come in there, you will learn a lot about what traders like myself, Chris, Marco, etc., Ivan are regularly doing in markets, and more importantly, why we're taking the trades. So again, this silver trade is a position that I've been sharing inside of the group. I'm going to go update that here, make some moves on silver as well as my dollar positions, which are absolutely, look at this, silver's down 4% now. US stock market opens up in 25 minutes here, guys. I'm going to pass over the show. If you are interested in joining, click here, chat for extra discounts, because right now memberships are 45% off if you chat in using the link that's just been dropped in the chat. When you go to that page, just for context, when you go to that page, you have a couple options. You can either live chat with us on our website, that will pop open right here. And then if you would prefer, you can also message one of our team members over on Telegram, WhatsApp, or Facebook Messenger. Okay, with that said, guys, up next, trade ideas with Alan Perez right after this quick break. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone. Wherever you guys are watching, happy NFP Friday. There is a lot of volatility. And one thing I will say, guys, go ahead and join the Discord, join the Telegram channel. It is completely free, and we give you live updates on what's going on in the world from a fundamental and technical perspective. I do my very best to deliver on that front. But also, too, join the VIP signals. Lots of activity happening here, for myself included. Lots of trades. I just took a trade not too long ago, a Eurodollar position that I posted live, and I just added to the position today. So I added more size to that trade. So things are starting to pick up here in FX. Volatility is a little bit sleepy, but it is up 3.7% today. But we'll go ahead and see what happens, right? So let's go ahead and talk about non-farm payrolls, how it's going to affect the market and how the market's taking it, right? So we do have a stronger dollar here up front, right? So that's going to be good there. The unemployment rate stayed flat, but we actually beat expectations. We actually went from 89,000 expected to 172,000. So that what that did, right, for the market, the way they interpreted it is that the U.S. interest rate futures raised odds of a December rate hike to 63% versus about 48% just before. So the market is pricing in additional tightening as early as December of this year. And so you are getting that breakout there in the dollar. And so I'm currently in this trade right here, a euro dollar short position, which is looking quite well. So you can see here that the breakout is pretty much about to happen here. I also took this position on a prop firm account that I have. So I'm up about $1,200 on this one. And I added to the position not too long ago. So I'm up about, what is the total of this? $1,600 there on the prop account there. So with FTMO. So looks like it's working out pretty well. But you do have a lot of other opportunities that I'm looking at as well, right? The metals market. You can see here that metals are melting today. You have gold here lower, but silver is really leading that charge there. This is the level that I'm looking to go ahead and short from. If we do get a breakout from here and retest, I'm definitely looking to trade the continuation to that 200-day moving average. I've said this before, but silver is like one of the weakest metals, I think. Like, after this crazy move upward there that we had in silver, I think it's one of the more vulnerable ones, and we're starting to see that play out here. Reason being is because we have higher price of oil, higher inflation. Central banks are looking to tighten a little bit more aggressively there. That's gonna hurt the silver, the market, gold as well. So lots of things lining up. Bitcoin is a chart that I like as well too. Another great chart there that's at a very key level of support. If you do get the breakout, I might look to take a stab at that one as well. Of course. So yeah, lots of things lining up there. But the dollar index is probably the main thing that I'm watching here, and it's looking to go ahead and break out higher. So yeah, that's kind of what we're looking at. Like always, guys, feel free to drop any charts, anything like that into the chat, and I'll do my best to go ahead and break them down for you, give you my honest thoughts and opinions. And yeah, let's go from there. Euro should break much lower. I agree, man. That's kind of the trade that I'm in right now, targeting 1.15, but I'm looking to go ahead and move it down all the way to 1.14, which is about that 100.5 level on the DXY if price continues to drop. So right now, the fundamentals are all lined up there for the dollar. Think about it. We had, well, I'll just show you. In fact, let's go to the Edge Finder. We're gonna go to the Edge Finder here, and I'm gonna show you the economic heat map, right? Well, let's look at the dollar right here. You can see that the asset scorecard right now is very bearish for the dollar, and it's only going to improve once we get the new data inputted from NFP. So COT positioning, right? The institutional money buys and sells are net bullish on the dollar, right? You do have also too the 4-hour and daily chart trend, which is looking bullish as well. Obviously, you're seeing a rise in the dollar. Let's look at manufacturing PMIs. Recently this week, they actually beat expectations, so that's good for growth. Services PMIs as well beat expectations. Retail sales neutral there, so it really doesn't do much. Consumer confidence is bullish there. On the inflation story, now remember, elevated inflation is actually good for the currency, right? It means that the odds for higher interest rates is going to promote like a higher yield in that currency. And so right now we got some bullish signals there on the inflation front. CPI came in hotter than expected. PPI came in way hotter than expected at 6% versus 4.9 forecasted. PCE neutral there, and the 2-year yield is elevated. So that's going to be hawkish for the dollar right there. Jobs market, non-farm payrolls, that hasn't improved yet. This hasn't updated, but that's going to only, add more fuel here. The unemployment rate stayed flat. Jobless claims did come out a little bit bearish there, but we had ADP and JOLTS come out better than expected. So you have a U.S. economy that is showing you good growth, a decent labor market, and elevated inflation. So if the Fed wants to hike rates, they can do so. They are in a position where they have the room to do so. So that's going to add some fuel to this trade. And so that's why we're in this position. So really, really good there. Looking at the yield story here, you have yields elevated. So we were trading within right here before yesterday. So basically you had the risk of it breaking down lower and breaking this upward trend line. That is the complete opposite, right? You can see that the bond market is pricing in higher yields, higher interest rates in the future. And so you have the 10-year yield up today, up 1.4%, and the 2-year yield up 2.27%. So yeah, elevated inflation means, higher chances of elevated interest rates, and you're seeing that reflected on the dollar. So lots of good things happening for that. Pound dollar shorts. Yeah, I'm in euro dollar shorts, so I'm not gonna, overexpose and go into the pound dollar, but the pound dollar is getting weaker today as well, right? You have been trading within this like little channel here, this level of resistance near it. You are now at the 200-day moving average. If you get a definite close below that 200-day moving average there in yellow, I think the same thing as the euro dollar. I mean, the dollar's pretty much going to overweigh that and carry this thing lower. So I like the target of 1.325, 1.32 on pound dollar. That's kind of where I would be if I was in the position. I'm not. So make sure you understand that I'm not in this trade. But something like this looks pretty good. This is also a possibility. Let me look at the Edge Finder as well to see where it lands on the actual scorecard. So let's go to top setters page. I know the pound basket has been getting beat up recently. Let's see if that's still the case. Yeah, pound dollar, very bearish. It is the most bearish reading out of all of them on the Edge Finder. So there you go. That's your confirmation right there. So you are kind of like in the middle of this channel. So the risk to reward would be pretty much 1-to-1. So keep that in mind, right? You don't want to over risk this. But again, this is a very, right now, the fundamentals are leaning in favor of the dollar. So pound dollar is a good one. I mean, Kiwi dollar as well. I mean, anything against the dollar really is looking to get beat up, right? So Kiwi dollar, we had a very hawkish surprise from the RBNZ. And now that whole move just got reversed, right here. Aussie dollar as well, right? Aussie dollar is breaking down lower. So a lot of good things setting up for the dollar. I can't express that enough, but that's probably my favorite trade right now. And because of that, that's trickling into the metals market, Bitcoin, higher yields. The price of oil too is coming down lower, which is good. I actually didn't see anything on the war front because usually there's at least one headline a day that we can see. Look at that, suspected Japanese intervention today, just now. As of a couple minutes ago, 10 minutes ago, you can see here that this chart here moved lower at USD JPY, which I would imagine is the case because dollar yen is pretty flat on the day and you're having a pretty strong dollar day. Usually dollar yen would be up by a lot and it's pretty flat. So maybe that's some more intervention there for dollar yen. Seems like they are actively defending 160. Of course, this is just a rumor for now. Once you get, confirmation, then you can actually go ahead and, make a trade off of that or understand that better. But for now, this is just suspected. But you'll get the actual data on the next business day, and we'll see if Bank of Japan intervene again. We'll see. Pound Swiss, I'm seeing that on the chat there. Let's look at Pound Swiss getting a bearish reading of -6 on the Edge Finder. Let's go ahead and type that in there. And we have Marco here joining us as well. So Marco, how are you, man?
Hello, I'm doing well. How are you?
Pretty good, pretty good.
Awesome. So did I break something you were saying? What were you talking about?
I was just gonna go over pound Swiss real quickly here as it was requested on the
Yeah,
chat.
go ahead.
It's getting a bearish reading on the edge finder there. Actually, I do think that you're actually at a good premium to short if you wanted to short, right? This thing is range bound. So you want to short at the top end of the range, and we're getting pretty close to there. So, risk defined, right? Short position, stop above structure, target over here. It's not the best risk to reward, but obviously you want to dial down the risk on that. But I think it's a good trade. Marco, your thoughts? I know you're pretty bearish on the pound.
Yeah, I'm pretty bearish on the pound as well. Although I'm avoiding Swiss at the moment, so the only thing I'm sort of looking at is the Euro Swiss, and I'm looking at the 0.9 level. But that's about it as far as the Swiss goes. I'm not really looking to play it with any other cross, let's say.
Fair. So Marco, suspected yen intervention is what the street is saying, I guess. So we had a strong employment figure for the U.S., which is going to add that fuel to that dollar. However, dollar yen seems to be flat on the day, and I think people are speculating that there was some intervention. You are at the 160 level, so it makes sense there. Do you think they intervened, or too early to tell?
I think they could have, maybe a smaller intervention. So I think that that could have been the case. But what we're looking for is, of course, a bigger one. So we're looking for, if I just put on my screen there. So let's go to remove add and UJ. So UJ, we're looking for this sort of a reaction right there. I think that could come a bit higher. So if the news continues on this path of let's say good US data with possible high inflation, I think the dollar could rally a lot more. And 161, 162 could be some levels we hit on UJ. And at that point, I think we could get some aggressive selling. So that's what I'm looking at as far as positioning myself short on UJ. What about you?
Yeah, I think there's a lot of things that could happen, right? Like similar to Euro Swiss, where people kept trading into that 1.2 level. I think people are probably going to do the same with dollar yen. They're going to trade into 160, and then they're probably going to take profits because of that, opportunity, or that not opportunity, that potential for an intervention, right? So I think you'll probably see some of that probably piled in with verbal intervention or actual intervention. So I do think that 160 will probably be a ceiling for now. All right. So I'm actually looking to go ahead and buy dips on dollar yen if we do get them. But again, like, you're completely right. You could actually just get a breakout to 160 or higher and continue from there. But I think that the likely case for now is that dollar yen's getting to 160. Profit taking is taking place because of the worry of intervention, and possibly the actual intervention as well could bring it lower. And I think dollar yen just kind of range bound for a little bit. That's kind of my thoughts there.
Yep. And so how did the recent news play out for your EU short?
Came out well. So very good for the dollar, right? It was we pretty much have a pretty solid basket for dollar. So you have the growth story looking well. You have inflation that's elevated, which is good for the dollar. And you have a pretty resilient labor market. So all things are aligned for the Fed to hike rates if they need to. Like, they're hiking into a very healthy economy, right? It's not like one thing you've mentioned, which is RBNZ or New Zealand, where if they were to hike, they'll be hiking into a market that has a worse labor market, right? So you want to avoid that. So things are looking pretty good for the US on a relative basis. So right now, the euro dollar position is doing well. I actually added position to that trade on my prop firm account. So I added a little bit of an extra position there. On my live account, I kept it the same just because I don't want to overexpose. But it's working pretty well. And my stop loss is still within the same level there. So until we get like a break and retest and continuation, then I'll move my stop loss closer to like the break even and trail structure. But for now, things are looking pretty solid, and I expect for this thing to continue lower because, I mean, you have a beat on all fronts: growth, inflation, labor. Looks pretty good.
Yep, absolutely. And how would you describe the bearish move in the NAS, let's say, for today, with a good NFP print?
Yeah, I mean, good NFP print, but then you have to understand the underlying reasoning or the underlying implications for it, which is higher rates for longer, which that's going to crush the
Yeah.
valuations. That's going to, it's going to, be more restrictive. So yes, it's a good number. But I do think that, I mean, you have yields, you have the 2-year yield up 2.15% today, right? A big increase today, getting close to those recent highs there. So that's not going to be good for the stock market. And so,
Hmm.
the longer it's just simple, right? The longer that oil stays elevated, the longer interest rates are going to have to be. And the longer that they are, it's going to hurt probably equities for sure, right? It's going to feel the dollar. It's going to hurt equities, though. It's going to hurt metals as well.
Yeah. Yep. Yep. I think that definitely makes sense. So, is this just the start? What do you think?
I don't think so. I kind of don't think so. I
Okay.
kind of think that I think until you start seeing some rate hikes, maybe there'll be a problem.
Okay. Yep.
But there's
Yep.
there's a sweet spot for interest rates for growth,
Hmm.
right? Like, anywhere from like 1.5% to 3.5% or whatever is actually still a pretty healthy environment for growth to thrive. Once you start getting to like 4 or 5% more restrictive, then it can start to hurt equities market by a meaningful amount. But you're still in
Hmm.
a sweet
Hmm.
spot, so you kind of have a pretty good situation going for it. So I think it's probably just a little bit of a pullback, maybe, and I think we ultimately continue higher. I think also too you have some very promising, exciting names coming into the market too. So like we've mentioned before. So I think for now this is probably just a smaller pullback. I would probably wait for some other sentiment reads to kind of get a gauge as to is this the start of it or not.
Hmm.
I'm thinking like put to call ratio, AAII sentiments, things like that. But let me just look pretty briefly here. Yeah, put call volume on S&P is pretty neutral. Nasdaq, let me see the Nasdaq. You're having actually high call volume, which is interesting. So maybe, right? Maybe with the Nasdaq, maybe we are getting some very extreme optimism there. And usually, guys, for those that are new to the stream, for one, this is the Edge Finder. This is a tool that I use to make fundamentals easy in my trading and implement it. But when you're looking at the put to call ratio, this is basically high put volume, high call volume. When people are overly bullish, you can pretty much take a contrarian stance. And so once we get overextended, usually see I wouldn't say like a reversal, but you can start to be worried about the price action and the direction that it's going. So right now you're seeing high call volume on the Nasdaq, which is probably why Nasdaq is the one tumbling more than S&P. So
Hmm.
we'll see.
Hmm.
We'll see.
Hmm. Yeah, and I got an interesting chart recently. So if you take out all of the semiconductor stuff out of the S&P, the gains would be very minimal. So like most of it is coming from AI, most of it is coming from capex, and of course it's the hottest thing at the moment. I think most of the retail traders online are talking about AI at the moment, so that's not a good sign to get in. And I'm getting some messages about possibly, let's say, buying some stocks that are connected with AI. And right now, it's probably the worst time to do it, because once it gets super popular, that's usually the time where it's gonna roll over, right?
What they say, the saying is like once your taxi driver starts talking about it, then
Yep,
there's a top, right? Like
yep, yep, yep.
it's like I remember gold and silver, that parabolic run up, right? Everyone was talking about silver all of a sudden, and everyone was going out. There was long lines in the US. I don't know about in Europe, Marco, but in the US there was just long lines at pawn shops, at places you can buy metals,
Really? Okay.
lines out the door, man. People were paying a premium and they literally bought the top. And ever since then,
Yep,
silver has been crushed. So
yep, yep. Yeah, I mean the Nasdaq is starting to look a little bit like gold and silver in by the end of 2025. So super overextended, very much above the 200 EMA. Like if we look at the Nasdaq and the 200 EMA, it is just way above it. So I don't think is there any time in history when it has been so bullish with such a distance between the moving average and the current price. So that's something also to consider as well.
yeah, it's just general, like the market does that, right? Like the market will definitely fix itself when it needs to be fixed, right? When it's time to.
Hmm.
Like you make a good point. And I was gonna bring this point up as well, but like, we all know what happened to this chart, right? We were all very excited with this chart here, right? Look at that. Look how beautiful that looks. And then you just move the chart to the right a little bit, and then you're like, oh crap, right? Same thing with gold as
Yep.
well.
Yep.
Monster run up. And so you're starting to see that. And so the only difficult part is that it's hard to predict when it happens, right? Um, so like for me, like I've said this before, I wouldn't short it. I would just be patient. But We'll see, man. We'll see. I think that volatility is to come, though. Nick mentioned this before he transitioned to me, but the VIX has been very sleepy. It's been very,
Mm-hmm.
very sleepy despite all of
Yep.
this going on. So
Yep.
we'll see if it wakes up. And if it wakes up, I think we'll have a lot of fun this summer.
Yeah, I saw a video you made that the markets are kind of sleepy and the volatility is low. And like since March, I think the number of trades we're taking has reduced a lot, especially from when the conflict started. So there's definitely less opportunity out there, except if you're just buying the Nasdaq every single day, like some of the members in the Discord.
All right,
Which,
so Marco, I wanted to make a controversial video, and I withheld
okay.
from it. But like, I've been seeing a lot of like prop firm trading in my feed. A lot of people
Yep.
that are trading like the futures market, like NQ and ES,
Yep.
and
Mhm.
they're like having the blast. I'm like, well, yeah, you should be having a blast. Like this thing is moving in a straight line up. Like I could see why there is success at this time, but I'm like curious as to like what that performance is gonna look like if you see a correction or if you see a choppy environment. But like this is a straight move up. Like if I've said this before to you, Marco, but like if you're not waking up, if you're like a ES or NQ trader, if you're not waking up and just buying the NAS on the low every day, like look at that. You've had 9 consecutive days up. Right now, it was interrupted now recently, but you had at one point right here, this little stretch, 9 consecutive days up, green day. So,
Mhm.
yeah, it's just crazy.
Yeah, pretty crazy. Pretty crazy. So any other currency that you're starting to like, or currency pairs that you're starting to like because of the NFP print?
So I'm gonna stick with euro dollar, Marco, but I actually do think that there's some opportunity to be taken with silver and Bitcoin. I'll say silver and Bitcoin. So silver
Okay.
here is at a level of support. Ideally, I would have loved to short it if we got a pullback back into like 78 right here, this level of resistance.
Mhm.
We didn't get that. It's continuing lower. Makes a lot of sense, right? For those that don't know, it has some borrowing costs, and the borrowing cost increases when interest rates stay elevated or get even worse. Or by get even worse, I mean get even higher. So
Mhm.
that's kind of what the market is pricing in right now, which is why silver and gold are getting beat up there. So I would have liked to again short at the high if I could, but I didn't. So if we get a break of this level here and a retest, I would like to take a stab at it short and just target that moving average near that $68 handle. Not looking to do that with gold. I think gold is a better long-term play to just establish buys over the long term if you get some discounted levels. But silver, I just have a feud with silver. I don't like it. I think it's gonna be a very
Mhm.
big disappointment. Bitcoin, similar situation as well. You have Bitcoin. What's going on with my chart here? It's not loading up.
Yeah, trading you can sometimes be a bit slow, like
There it is.
especially if you're using the replay function. On some days, it just doesn't want to replay.
Yeah. So Bitcoin here again reaching a level of support. I think that if you were to get a break from this level, I think 50,000 is probably the next place where it goes, and so I'd probably
Mhm.
play the breakout there as well. So kind of what
Yep.
I'm looking at there. Silver, Bitcoin, I'm looking to add to my list if it continues, but for now, I'm pretty happy with euro dollar. I added some size to it, like I mentioned to you earlier, so that's gonna
Yep.
do its thing, and I'm
Yep.
just gonna be patient on the metals and Bitcoin for now.
Okay. Cool. 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 I think that's good. So you're getting a bit more active since you now have the prop account.
Yeah, I'm getting a little bit more active, and things are just starting
Mhm.
to set up too as well. So
Yep.
the fundamentals are starting to come out now. I feel like the market is trading on that again. Before
Yeah.
it was just like
Yeah.
the headlines and stuff like that, and because of that, it was so back and forth where you had really no opportunities. Like you were either in a trade and you were holding on to it, or you just had nothing to do. Right? Like someone in the comments said that they only placed one trade in 2 months, which I'm like, dang, like like, that's takes a lot of discipline to do that, but
Mhm. Mhm.
yeah, things are starting to line up. Things are starting to heat up. We're starting to get some, more data points come out, and so it allows me to trade the fundamentals with more clarity.
Yeah, absolutely. So I wanted to say something, but I'm getting messages there in the Discord.
Yeah,
So
I see
it's
it
from
too.
Tiger, but it should be fine. Yeah. So basically, how I'm positioned for today, if I just put up my chart there, is I'm still holding my gold long, so that's in drawdown. My GU short is doing fine, especially because of the hot NFP print, so that's nice.
Mm-hmm.
And UJ, I do have on the watch list because we have hit the 160 level. But I think that this is not the time to short. I think we need to go a little bit higher than that. So maybe 161, 162. I mean, the higher it goes, the better. The perfect scenario would be like 163. I think at that point, the chance of an intervention is like 70 or 80%. And just betting on a meltdown such as this candle, and then basically to take profit, because I don't think there's going to be a sustained downtrend. I was thinking that at the start, but now I think it's just going to be one drop lower. And then I do have the equities looking for a pullback to the 20 EMA, but I'm starting to reconsider the whole thing. So I want to get your take on that. Like, the initial game plan was to buy near the 20 EMA, but I really don't like the story where everyone on the internet is discussing semiconductors and artificial intelligence and buying the Nasdaq and buying equities in general. So some thoughts?
I would say, Marco, that as long as it's not like a swing trade, like as long as you're keeping your time horizon in line with the market conditions, it's like the same kind of framework with the dollar, right? Where like you play that obvious trade until it doesn't work anymore, right? So like from what I'm seeing there on your screen there, Marco, that 20-day moving average seems to be a very solid level of support. So play it until it no longer works, I would say. I mean, similar to the prop traders out there that are flexing on Instagram, where they're making the bread on Nasdaq. Yeah, I mean, they're playing the trade, and eventually it won't work. And until then, you keep milking that cow, right? So that's kind of what I would say. Yeah, that's what I would say, honestly. But again, I will say that I am not participating in that. So me having no skin in the game, it's very easy for me to make that like assessment.
Yeah, I think it's worth it to get in on a probe. Of course, something I'm also looking for is a bullish reading on the edge finder to go with the entry, which right now I'm not sure if it's printing. So let's take a look. Nikkei. Okay, Nikkei is bullish. What about the NAS? NAS is neutral at the moment, so Nikkei may be a bit of a better story. And I think like getting in on a probe with smaller risk, it is worth it. And as you mentioned, like this could be just a small pullback, even though everyone is talking about it. There still could be something in the move to squeeze out, if that makes sense.
Yeah. What about the Russell, Marco? That one's getting bullish reading. Russell.
Let's take a look.
And Dow. Dow's neutral though.
With the Russell, personally, I would rather participate in AI, and I think the best exposure for that is the Nasdaq. So I prefer the Nas over the Russell, but Russell is not bad. Like it looks pretty bullish still, and I do like the Nikkei as well, because the Nikkei may not be in such a crazy uptrend as the Nasdaq. So let me just check the 200 EMA there. It looks a bit crazy. But I think the political situation in Japan is pretty dovish, and I think people have been sleeping on the Nikkei for a while. So I do like that play of trying to go long on the Nikkei. It has paid off in the past as well.
Fair. All right, Marco. Well, I think my portion here is done. I got a little bit mixed up this morning here with the schedule, but I'll go ahead and pivot out because I know James is coming out here very shortly as well. So
okay, so do we have a new schedule or?
No, I think I just got mixed up a little bit today with NFP and everything, but no, it should be all good. I think the website is updated, so we'll just follow that. But yeah, man, thank you so much for this Friday talk. Happy NFP Friday, and I hope you're feeling better too.
Yeah, I'm still a bit under the weather, but should be improving over the weekend. So on Monday, I should be back to 100%.
All right, man. Take it easy, man.
Yep. Thank you. See you on Monday.
Bye-bye.
Okay, let me just check the schedule there. Let me see the schedule. Okay, and then James is on at 9:45. Yeah, should make sense. So, to run through the watch list, which I already kind of did, but I'll repeat it. On gold, it's in a bit of a drawdown, so probably gonna get stopped out here, but I'm still gonna hold the position and I'm gonna let it run. GU seems to work fine at the moment, so seems to be running in profit. the NFP definitely did benefit me quite nicely. UJ, USD JPY. So UJ, gonna look for 161, 162 to sell, and the Nikkei, Nasdaq looking for a pullback to a 20 MA to get in. So for a bullish setup, but I need the edge finder confirmation as well. Okay, so I need the edge finder to print to give me a bullish reading, which on the Nikkei it's already doing, but on the Nasdaq it is still neutral. Some of the other stuff, let me see, copper. Copper, I was a believer, so I saw the uptrend starting to form on copper, which looked pretty bullish. Now, not so bullish anymore, so it's starting to drop rapidly. The pullback is pretty large, so not gonna look at copper anymore. Bitcoin continuing the drop, so will we hit the 50K mark? We definitely could. I know in the Discord it's a pretty popular view. So in the A1 Discord, it's a pretty popular view to call Bitcoin to 50K. By the way, if you want to join the A1 Discord, get all of my trade signals. You have Nick, Alan, Iwind, Chris Pulver, and me. So basically, you get 5 lead traders, and you also get a VIP chat with profitable traders as well. There is a discount code, so the discount code is Marco, and it gets you 25% off. Okay, the link to sign up is in the description. Okay. So, if you guys have any suggestions or requests as far as charts go, definitely put it in the comments. I'm just gonna run through some more things from the list. So oil looking elevated for longer, nothing super interesting. If we just run through the breaking news here. So let's go to market moving. You have this suspected JPY intervention, but it's absolutely minimal. So I'm not sure why they're doing these super small interventions, if those even are interventions, because they just don't seem to do anything. So personally, I don't get it. But it could be just a massive. It could be just a massive order at 160, right? Could be that as well. See. Okay, this is all for the NFP print. Canada. So Canada, let's take a look. Canada actually did okay. So Canada did well. Employment change, pretty positive. Unemployment rate definitely fell down. So Canada, things seem to be improving. Absolutely, yeah. Crushed the forecast and the much lower number than the sort of the rate. Let me see CAD yen. So CAD yen staying a bit flat. USD CAD. So it did sell off, but I think the NFP pushed it back. So the NFP brought it back to levels. Ethereum. Yeah, we can take a look at Ethereum. Okay. So Ethereum seems pretty bearish here, absolutely, especially because it follows Bitcoin. My personal advice, this is not financial advice, but I would just stay away from crypto at the moment. I think this is a falling knife. A lot of players are exiting. You also have MicroStrategy, MSTR. Is that it? MSTR. Yeah. So MicroStrategy falling down as well. This is the company that Michael Saylor runs, okay? So I think this is super bearish. It is gonna continue. So if you get if you get the rate hike story, and if you get positive economic data out of the US, but high inflation as well, so we're supposed to get the inflation print next week, okay? Next week we have the core CPI print, and if you get high inflation, I think it all lines up for the Fed to be hawkish, and the Fed meeting is the week after that. So yeah, you can see the Fed funds rate, economic projections, and the press conference. So that is all happening in 2 weeks. Okay. And if this is hawkish, then that's just going to be a super, super bear story for Bitcoin. The hype is not there. The narrative is not there either. Pretty much everyone is looking at artificial intelligence. If retail traders have some extra pocket money, they're probably going into the Nas, right? They're probably going into the Nasdaq, and they're not really considering Bitcoin. So I'm not sure where the demand would come from if you're bullish on crypto. I don't see a way for the demand to come in. Okay. So we covered crypto, we covered oil, we covered some currencies, indices. I told you my game plan as well. What else do we have? Well, we have the yields. So just remove this. The 2-year, the 10-year, this is definitely not good for risk on. So this is a very risk off move. It also tells you that the markets are starting to price in rate hikes. We can look at my, it's not mine, but we have the rate probability website right here. Okay. So for the Fed, we can see that it is on an upward curve. So essentially the market is betting that the Fed hikes. By how much? Well, current rate is 3.63%. And by the end of this year, so by the end of 2026, it should be around 3.8. That's what the market has priced in. So I think one rate hike is priced in for the end of this year, which is definitely a much different story than what we had before the Middle East conflict. So before the conflict, we had rate cuts priced in, and now we have hikes. So it's a big pivot, and it could be a very, very bullish story for the dollar. That's, I think, the most obvious trade at the moment. So the most obvious trade is buying the US dollar. That's exactly what I'm doing. So I'm selling GU. And okay, it's doing nicely. So it's flying lower with some nice force, but gold is probably selling off even more. Yeah. Going back to the DXY. So DXY, if the DXY can break out of this range, so break out of this resistance level right here at 100.2, something like that, I think we can go up by a lot, right? So I think this can start a really nice uptrend on the DXY, continuing to be long on the dollar and short things like the pound, things like the Canadian dollar. Or although recently we did get, or today we got some pretty bullish news out of Canada, right? So if we go back to this week, the news out of Canada was really good. But is this just one data point, or is it going to be a sustained trend or of better data? That's something for us to see. But the weak currencies are still, I think, is the CAD. I still think it's the GBP. Aussie is kind of strong, I would say, kind of. NZD is a bit tricky. So NZD USD, it is starting to lose value against the dollar. There's still a lot of hikes priced in for the NZD, but if you look at their economic data, if you look at their economy, the economy is definitely not doing well. So the economy is struggling, but you have rate hikes priced in. And you have the RBNZ, so the Central Bank of New Zealand. They have announced hikes, right? They put out their future projections, which were pretty hawkish, right? But if you know something about the markets, an economy that is not doing well plus rate hikes, that is never long-term bullish for the currency. Usually it is pretty bearish for the currency. So I think long-term, New Zealand dollar is bearish. We did have this hawkish reaction right here after the RBNZ meeting, but long-term, I think this thing should be going down. And if we look at, for example, some long-term economic data, so GDP, see NZD, very low and kind of even negative in some prints. So that's not good. If we look at the unemployment rate, I think this is pretty bad and elevated. Let's go back 2 years. I usually look at the trend for the last 2 years. So from 2024 at 3.9, and now we're printing 5.3%. I would say that is a pretty bad trend to the upside. I would say that's pretty bad. CAD, so Canada, we can see that latest print. It hasn't come in yet, okay, but it should be what, 6.6%. So 6.6, that's an improvement. That's overall an improvement. So that's fine. Anyway, I have ran out of time, so thank you very much for watching. If I'm gonna leave you with anything, it would be dollar longs. I would say the best trade at the moment is dollar longs. The volatility has definitely died down. There's less opportunities in the market. I can see from the traders that I'm following, they're taking less positions. But the thing that could work and what most professional traders like at the moment is dollar longs. I wish you good luck in the markets. You can catch me next week. I'll be streaming pretty much every single day. And don't go anywhere because I have James coming on right after my segment. So thank you for watching. Good luck.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello. Happy Friday, ladies and gentlemen. Hope everyone's well. Hope you all had a good week so far. So, how's everyone doing? On my side of the markets, there's not much going on. Aussie New Zealand is still hanging around entry, so I remain in this short position. Really not much to cover on this one. Sorry, 1 second. I need to close one of my tabs. Pound dollar had a very nice move today on the back of NFP. We had a very good print for the dollar. I'm not going to go over that. I'm sure Nick and Marco and everyone else has already covered all the data today. But yeah, positively impacted my position on the pound dollar. However, New Zealand CAD did take a hit to the downside. We are currently hanging around the 200 moving average on the H4, so I'm not too concerned yet, but it's not looking too bright at the moment. I've got a pending order on the Hong Kong index. I'm not going to go over this. It's taken on a weekly time frame. It's quite a large swing trade, so I might cover that one next week. Aussie Swiss, we did have a long position. I have a buy limit here. I didn't manage to get in on the entry I wanted, so I'm just waiting for this one to activate. And I'm now short on dollar yen, so I'm anticipating some sort of intervention around 160. So I've got stop loss just above at 161 and a take profit down at 156.5. So we'll see if this happens. If not, it's completely fine. But I'm happy to take a little bit of a gamble, if you will, on this one. It's not something I say very often when trading, but you know, when there's a clear pattern in the market, I'm willing to take a little bet on it. Aussie US dollar. I keep saying this. I'm not in it. I really kind of kick myself for not taking it. I mean, I wouldn't have taken it anyway. You know, just due to my personal risk constraints and things. But it's, you know, one of the best trades I've been looking at, and it's the one I didn't take typically. But it is what it is. It's completely fine. Euro Aussie is starting to break out, which is really nice. So we've been paying attention to the weekly level here, the weekly level of support on Euro Aussie, waiting for some sort of entry criteria waiting for my entry criteria to get hit. Now, the downside is the daily is still very bearish, but what we've been talking about and what I've been watching is this H4 timeframe. So I'm waiting for these highs to get broken, a new high to get printed, the moving averages to cross over and form a bullish trend, then wait for this pullback, And then finally, after all of that, I could start positioning into a long. So yeah, I really like it. But again, it's more just a case of waiting. There's nothing I can do just yet. The pound New Zealand, we were looking at this one. I've been paying attention to it, but there's nothing here anymore. So actually, I'm just going to scrap this one entirely, at least for the time being. And the S&P 500, Joseph. Hi, James. Thoughts on Swiss franc's weakness? I'm looking at Swiss yen shorts. I don't really have much for the Swiss. We can take a look at it in a moment, though. So the S&P 500, let me just see. So it's currently getting a neutral reading on the Edge Finder. So we're getting a neutral score of +2. So there's no readings there that are really going to, sway my hand. However, I personally have a bearish bias on the S&P. We are seeing the H1 start to turn quite bearish. We've cleared the previous low. We formed a lower high, and it seems like we're on the way now to create a new low. So we are currently hanging around this support level. So now in my book, it's really a case of what happens here. Either we reject and continue higher and, we continue this upside rally that we've been on, or we end up breaking lower from this point, and then I can start getting into some shorts and building up a position to take it back down to the previous all-time highs, which would be, let's say 7,000. I think that's a reasonable area to look for as a target. But yeah, that's kind of all I've got. The Nikkei, I'd still like to be a buyer. I got out of this one at 4R, so I actually did, in hindsight, get a really nice exit on this one. So I'm just waiting for another entry to pop up, and I'm happy to get back into the trade. I really like it, but yeah, I was happy to book the profits on it. So what did we want to look at? Swiss yen. Okay, let's have a look at Swiss yen. Let's go to Forex scorecard. And Swiss yen here's got a -2. Technical is bearish. Institutional positioning technically is getting a bullish reading. So we're looking here at the weekly change, which is bullish. The net positioning, however, is bearish. Retail sentiment is bearish. Economic growth, obviously retail sentiment, you'd want to counter trade that. So they're obviously buying. Economic growth is bullish. Job markets is bearish, and inflation is bearish as well. So, yeah, I mean, short bias makes a little bit more sense than being long at the moment. However, what we've been thinking about this market, we've looked at it in the past, and there's just not really anything to do here for me anyway. So we're kind of just stuck in this range. It's a large range. I'll grant it that it's an H4. Yeah, pretty large range. So you could definitely make money within this, but there's no clear defined range, no clear defined trend right now for me to do anything with. So how could we go about this? Let's think. I think what we'd need to do, or what I'd need to see here, is a break of these lows, a new low get printed, a pullback, which would be, let's say 50% retracement, and then some sort of continuation. I think that's kind of all I could come up with here. But yeah, there's nothing really that I'm interested in on Swiss yen. So what else do we have on top setups? Let's see. When it loads, there we go. Let's get rid of neutral. So US dollar is very bullish. I'm not sure actually if the US dollar has loaded in today's data. Let's take a quick peek. Actually, I'll need to check the heat map, I think, to see the dates. What day is it today? It's the 5th. So wage growth. Where's NFP? NFP hasn't updated yet, which is fine. So the US dollar is going to get a higher reading than what it already is. So I'm very happy to stay in my dollar long position on pound dollar. I think it's still a fantastic trade. We can see pound dollar is already very bearish with a score of -11. Silver, unfortunately, I've missed the trade on silver. I know Nick caught a really nice position, which I'm a bit jealous of, but I didn't get into that one, sadly. Dollar yen is getting a bullish reading. However, I'm still happy to stay in my shorts, more on a speculation of the intervention, not on a fundamental view. But yeah, I think it's quite obvious that dollar yen fundamentally is a bullish market. Nikkei is still getting a bullish reading as well, which reinforces my idea of getting back in at some point on the next pullback. We had BOJ intervention. No, we didn't, because the Bank of Japan doesn't intervene. It's the MOF, and we haven't had an intervention. We've had previous ones. We've not had one that I'm actually looking for currently. So yeah, I mean, we've had these ones over here, but I'm imagining we're going to get another another one around 160-ish within that area. We'll see. If it doesn't happen, it doesn't happen. I've not got much on the line here, so it's more of a little gamble. And yeah, see how it goes. AUDNZD. Yes. So excuse me. I'm currently bearish on this market. So JP Morgan have actually repositioned long. However, there are other banks like Credit Agricole that are short. So in terms of real institutional positioning, it's actually quite mixed at the moment. However, sorry, I'm struggling to get words out today. However, I sit bearish because I think the Australian dollar's kind of run its course. The advantage it had, I just don't think is there anymore. Earlier this year, it was very simple. We just had to buy the Australian dollar. Now we're getting the US dollar that's picking up. We've got the RBNZ that's pivoted hawkish. It's just not it's not the first class currency, I would say, at this point. So I think it's very reasonable to expect unwinding of Australian dollar shorts. Maybe not a full correction, but, to, I don't know, let's say down here. But I would expect at least back into these highs. Credit Agricole got to target at 1.16. So I'm quite happy to stay short. It might not work. I might have to take a couple of attempts, but I think it's a little bit, what's the word? I don't know. I just don't think it's realistic really to think that this market can come all the way back up to these highs without having some larger type of pullback. So it might come back to these highs eventually, but I do think we are in for some sort of reversion at some point. So that's my thought process, but yeah, take your own analysis, of course. So what else do we have? Aussie US dollar is getting a bearish reading. So unfortunately, I was ahead of the Edge Finder on this one, but I just didn't take it. That's really frustrating, but there's nothing I can do about it. Euro New Zealand's getting a bearish reading. Pound Swiss is still bearish as well. However, I was stopped out of Pound Swiss earlier this week, which again was a little bit frustrating, but it seems like it was probably for the best given the current price action. So let's see. I think what is very likely to happen here is we come up a little bit higher towards the daily 200 moving average and then have a drop. So I wouldn't imagine that this is now going to be, some crazy bullish trend that starts forming. The fundamentals are still bearish. The UK, in my opinion, is bearish. I just don't see a case where this is a bullish market. So the downside is it's very choppy. It's a very difficult market to trade. If you're a price action trader. If you're more of a long-term trader that doesn't really care too much about technicals, it's actually very simple. You just sell the highs. But when you are more of an active shorter-term trader, you kind of got to account for the technicals so you can get the best entries possible, which makes it very hard to trade Pound Swiss. Then you've also got the added layer of difficulty with the swaps. So it's not really a case of, just sell and sort of average into a position. Obviously, you could do that if that's within your framework, but I don't like to do that because the swaps are quite expensive. So yeah, I need to really nail down a clean entry. Otherwise, I can't really justify taking it. What else do we have here? Euro dollar is bearish. Euro dollar, I don't mind it because obviously I'm quite bullish on the US dollar. The problem that I've got with Euro dollar is the ECB is expected to start hiking rates. So while, I'm not saying I'm bullish euro dollar by any means, but I just don't see the reason to go for euro dollar when you could alternatively go for pound dollar, which is got a better relative strength. So yeah, that's my thought process there. Where has pound dollar disappeared to? Here. So yeah, I think the easiest level or the sort of base case for pound dollar right now is revisiting the previous sort of swing low around this point here. And then if we can break this, I think then we're pretty much set to go towards the profit target down here, which would be, let's say 1.32. I think that's reasonable. So yeah, we'll see how that one goes. New Zealand CAD is looking like it's going to get stopped out probably within the next hour or two, which is a bit unfortunate, but there we go. And Euro Aussie, as I said, I'm still looking to be a buyer when we get the trend change on the H4. Okay, what else do we have? The Russell is bullish. However, I'm not really interested in being a buyer of the US markets right now, like the Russell, the S&P, Nasdaq. What else do we have? Pound Swiss, we just covered. Euro New Zealand, I'm not really interested in just because it doesn't have a great reading. And as I said, the Euro or the ECB is expected to hike rates. Aussie, US dollar, we covered. Euro dollar, CAD Swiss, pound dollar. Okay. So let's take a quick look at the inner workings at the moment. So what do we have? We've got the Japanese yields that are significantly higher, not too much of a concern or something I want to focus on right now. The German yields are doing okay on the 10-year. We've got all around not that much of interest. We are seeing 10-year yields trending to the upside, generally speaking. Same thing with the 2-year yields. Currency strengths, we've got the Swiss that's outperforming, and we have the yen that's significantly underperforming on the weekly timeframes. I'm just thinking what else we have. I don't think there's much else to cover. The VIX is relatively low at the moment as well, which is, you know, kind of fine. I'm not really bothered about the VIX at this time. So let's go back to the S&P and let's see what we could do. So the thought process is we've had an incredible run. So this is obviously a weekly time frame. We've had what, 1, 2, 3, 4, 5, 6, 7, 8, 9 weekly candles. Just straight buying. Obviously, you know, we've had pullbacks on smaller time frames, but you know, it's a lot of buying pressure with no pullbacks on the daily time frame other than really this one that was minute. So I think it's reasonable to expect something to happen here, even if it's not a full correction back down to these previous highs. So let's see where the fib lines up with. If we take it from the peak, from the low to the high, a 50% retracement of this move lines up really nicely with this structure. So I think to do this, I'd have to be quite aggressive because what I don't want to do is wait for the H4 to change bullish and I'd miss, you know, what, 40 to 50% of the move. So I'd rather take it on the H1, which is a little bit out of my typical strategy, but in this case, I would be willing to take the risk. And then, yeah, see how it goes, take it back down to these all-time highs and then wait for the reaction. If we see a bullish reaction off that level, then I could pivot long. However, if we continue lower, that's fantastic. Then we could look for corrections a little bit lower, down to maybe 6,700, potentially even lower. It really depends what happens. You know, we've got the IPOs coming, we've got the Fed that's expected to hike rates later down the line. So there is potential for the S&P to continue significantly lower, but again, I'm not going to try and front run that too hard. Can I cover Pound New Zealand? Yeah, so I think Pound New Zealand does still have a pretty good bearish case for it, but I just don't have any interest. So I was looking at two different levels here. So I was initially looking at this fib zone, which was very quickly broken above. So there was nothing there for me. Then I was looking at this sort of resistance right here, which also didn't really do anything. We had a bit of a slowdown, but we didn't have, you know, anything, no significant reaction to trigger me short. So I think the main thing to watch now is the next resistance we're coming up to, this previous double top, potentially a triple top here. I would expect that to be the pivot point, if you will, not an actual pivot point, but a pivot point in this context, in terms of if we end up coming to this level and we start rejecting, I think that's probably the best entry point you'll be able to get. However, there is a risk that we actually just continue higher from there. We have the break, retest, and continuation. I don't think that's very likely. I just don't think there's much optimism for the UK. So even if we do break higher, I would still be looking for shorts, you know, on higher time frames like the daily and the weekly. So yeah, that's the case there. So if we have a look, I don't think Pound New Zealand's got a reading, but I suppose we can kind of derive it here. So Euro New Zealand is bearish, Pound Swiss is bearish. We've got the New Zealand US dollar bearish. We've got Pound US dollar bearish as well. So yeah, not really a great signal for Pound New Zealand, to be honest. So if we just take it simply, you know, Edge Finder or technicals, there is no trade in my opinion. But I think if you trade central banks and you dig a bit deeper, maybe you could find something. Dollar CAD. So dollar CAD's bullish on the Edge Finder. It's not really a market I've paid any attention to, but we can have a look. Let's get rid of this. So it seems like we've missed the move, to be honest. So the weekly time frame was quite convincing. I'm fairly sure we did look at this actually, but I didn't do anything with it, unfortunately. So we've come down to this weekly 200 moving average. We've had a very clear rejection to the upside. So weekly is undeniably bullish. The daily technically is actually still bearish with these moving averages. And it seems like we're coming into this sort of potentially triple top area. And then the H4 is bullish. But again, I think buying makes sense. So I wouldn't want to be a seller, but I would be very cautious about this high that we're approaching. So I think the easiest or the base case is actually just waiting. So if we get a pullback into this level, wait for some sort of, a continuation to this level, wait for a pullback and then a continuation, and then break, retest, continue from there. I think that's very simple. But yeah, it's a little bit tricky because when you trade dollar CAD, you're very exposed to the headlines. You know, if you get de-escalation talks, this market very likely will reverse. Obviously, we're going to get weaker oil, yields will come down, as oil flow optimism starts coming back, and we get inflation expectations lowering. So it depends on your risk appetite. If you're very confident that we're not going to see the Strait of Hormuz reopen, and a lot of optimism coming back into the markets, I think this is a great long position. So yeah, I think that's something to consider if you're looking to trade this one. What else do we have? Not too much. Let me just check the time here. Okay. So I've got 10 minutes left, and then we have Tiger coming to take over the show. What do we have? So US dollar, but let's take a look at the US dollar individually, because it looks like we're about to break 100. So I think we should all be aware of the trend line we've got on the dollar. It doesn't really matter how it's drawn. You know, I think this is one of those times where it's quite obvious that trend lines can have quite a lot of discretion behind them. That's not much of a big deal. But regardless of how you've drawn it, I think this is quite obvious. So every time we come down to this level, we have some sort of bullish cycle, maybe not a massive one, but we come down, bullish cycle, we come down, we have a bullish run, and then we come down again, bullish cycle, and the same thing again over here. So it's reasonable to expect this pattern to continue. Now, we have had relatively good, well, not really, we have had the good data today. We've obviously got the Fed that's seeming a bit more hawkish. We've got yields elevated, and the dollar is reapproaching this really significant level, around 100 to 105. So I think the key thing to watch for here is if we can break this level. Either we break or we, completely don't, and we just end up in, back in this range or still stuck in this range, because this has been going on for over a year. This was established back in May 2025. Since then, we've done nothing. The dollar hasn't moved really. So if we can break above, I would expect that to be a very bullish catalyst for people in the markets, investors, traders, whoever, to then say, okay, we've got all the good fundamentals for the dollar. We've just broken out of a 1 year range. Very likely we're going to start coming back up to towards 105, 110, maybe even higher from there. So that's what I'm watching. I am bullish on the dollar, as I said. The edge finder is backing that up, and so far the technicals are quite supportive. So yeah, I think dollar longs are sort of the easiest play right now. Whole world is forced into dollars. Yeah, that is exactly it. Yeah, I mean, it's still the world reserve currency. So I just don't have a bearish case for the dollar right now. I think there could be an argument. And actually, I did make a video actually kind of I think maybe a week ago, calling for maybe a bit of a pullback on the dollar. I think I was wrong. So my argument was that at the time we had pretty good headlines, some ceasefire, sort of peace deal type headlines coming in. On the back of that, I thought, if the Strait of Hormuz opens up and we get oil flowing, it's not an immediate effect, but if that starts flowing, we can get the optimism back, inflation expectations cooling off, yields come back down, central banks pivot back to their initial stances or begin to, and then maybe the dollar would lose some of its bullish run. But I just don't see that right now. I actually think, if anything, even if we do get the Strait of Hormuz open back up, I think we do still have dollar advantage there. It might lose its war premium, but it's okay. So I feel like I'm speed running today, but it's fine. So Bitcoin is continuing lower. I'm seeing a lot of bearish calls right now. I should probably reword that. Not bearish calls. I'm seeing a lot of depression, I think is the right word. So if you go on X, and there's a lot of people on X that either invest in it or trade it, there's so many people that just seem down in the dumps and really depressed about Bitcoin and crypto in general. Normally, that can work as a very similar signal to, I think Alan was saying it, or Marco, or someone was saying it earlier in the stream. you know, when silver was rallying, everyone was buying silver. Everyone was talking about silver, and then it had its crash. It dropped what, 40%, 30%. It could be a similar situation where everyone is getting so down in the dumps about crypto and Bitcoin. Actually, it could be a little bit of a bottoming signal. I'm not saying it is. I don't trade Bitcoin. I don't really understand it too much, which is, you know, actually quite a good thing. However, on a counter argument to that, it just seems useless. You know, I know there are people that are really optimistic about Bitcoin. I don't trade it. I don't invest in it. I don't pay attention to it. It's had no effect on my life. You know, I've never been in a point where it's like, oh, I really wish I had crypto to buy this, or I really wish I had crypto to do that. Never once. It's got no application in the real world, as far as I'm concerned. So there is that side of it. And then there's also the idea that it's just not done anything, you know, since I think it was 2020 or 2021. Let me see. Price range from, was it 2021? So let's just take here. It's done, yeah, nothing. It's, you know, so if you invest in the S&P, you'd be up significantly. But if you invest in Bitcoin back in 2021, you'd be either break even or in a loss. So that's what I mean. It's very difficult for me to really be a bullish, but I also don't really want to be bearish because, you know, it'd be silly to be bearish on Bitcoin, I think. But yeah, I think from this point, the easiest level to go down to will be towards 50K, maybe retesting these lows over here, and then potentially we could have a bounce from there. But again, it's not my forte, so I'll leave it there. I don't really have anything else to discuss. What do we have? Just seeing if we missed anything. Let's take a quick look at the Russell. Actually, just bear with me for a second. That's frustrating. I had a buy order on YM, which is the Dow futures, and it missed by a couple of points. So sad. I actually need to cancel that order now. Hold on. Sorry, I'm being a bit unprofessional on stream, but I have to manage positions. Okay, so what do we say? Russell. That's what we were going to look at. I'm not really seeing too much. I think you know, if we're going to keep it really simple, I think this is actually a pretty good buying opportunity, maybe. And obviously, this depends on your personal forecast. I actually don't really have a bullish case on Russell, other than the fact that the Edge Finder is bullish, and we've got a really nice support here. So actually, what might change my idea is if this is a fib. It's not. So yeah, the technicals are a little bit flimsy. Oops. But yeah, if we take it here, we've obviously got previous highs or previous all-time highs. We've got the break. We've had multiple retests, failure to break low. We've got the bullish trend here on the H4. And it looks like we're about to form a bullish H4 candle on this level as well. And then again, we layer on the fact the Edge Finder is bullish. So maybe a long position on the Russell is maybe a good idea. And actually, I've just noticed we had a gap here that's been filled as well. So it's tricky because I probably would take this, but the fact that the dollar is doing so well, and I just, yeah, I don't know. I just don't know if I can justify taking the position. So I think I'm going to have to leave that one on the sidelines. Anyway, moving on, before I head off, we've got the metals. So gold and silver both having a very, very bad period. And again, congratulations to Nick for catching the short on silver. Yeah, a bit jealous, but hey ho. So I don't know what to expect on the metals, to be honest, because I think we are still in a very bearish environment. I think the markets are obviously telling us that as well. Silver is coming down to its daily 200 moving average, which could be quite a large rejection point. So I wouldn't say we're going to, you know, come down here and then just rally to the upside, but we could see something similar to what we had previously on silver, where we come down, we have a larger pullback, maybe towards the 50 moving average, and then from there we start heading a bit lower, and maybe come down towards sort of the 50 level and retest the high here on the left, maybe. But I don't know, and it's tricky because I really like the metals. You know, I don't want to really be a seller, but that idea has kind of burnt me. So, you know, I don't want to be a seller, but I've missed out on a lot of money by not being a seller. So yeah, it's a bit frustrating. And gold's actually just broken this fib level as well, so I'm going to remove that. And we are breaking below the 200 moving average on the daily, which is a big telltale sign. So either this is a big point for gold now. Either we have a really nice rejection, which isn't backed up. There is no reason to have a rejection at this point, other than the fact we've got support. There are no fundamentals really to support this idea. So I think base case is we have a bit of a rejection. We continue lower, retest, and then continue from that point, which might sound a bit silly to some people, but then you zoom out to the left and look at how extended this market still is relative to, you know, sort of its historical prices, let's say around 2000. By the way, I'm not saying gold's going to 2000. I'm just saying that it's still a very expensive market looking at the historical price movement. Okay, Nikkei, someone asked for that one. So I'll cover this one very, very quickly. So what I would want to see here, I suppose I can get rid of this. I don't know why it's still there. What I can do here is basically the same thing. So it depends where you draw or where you consider lows. So I maybe would consider the low here, just because it's sort of the most prominent swing low. But there is also an argument it could be here, which actually would be quite a nice buying opportunity. We've got double bottom here, a bit of resistance as well. So maybe it'd be worth taking 2 attempts, either trying it here. If it doesn't work out, then we could go for the second option. We do still have the bullish trend on the H4. So yeah, I think it's very simple. Now it's just a case of where do we pull back to? I prefer this idea. And the reason is because if we take the first idea here, we could still see a pullback or a larger pullback towards the 200, just like what we had here. It would stop us out basically to the point or to the pip, and then it would rally, or then it, you know, we have potential upside. So I just think it's a little bit of a precarious entry. I'd rather go in here, and maybe if I miss it, I miss it. But yeah, this is kind of what I want to see. Anyway, ladies and gentlemen, we I can't get my words out. Sorry, I'm stuttering all over the place today. We have Tiger coming to take over the show. Ladies and gentlemen, have a fantastic weekend. Thank you for being here. Stay safe. Don't get margin called, and I'll see you all next week.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Friday. Great day by default, as always. Same message every Friday. Great day by default. Hope you're all doing well out there. What'd you think about that NFP result? More than doubling the forecast. That was a pretty hot ticket right there. Unemployment rate stayed the same. So when we take a look at the heat map, the U.S. heat map over here, it's let me see, what was I just looking at earlier? It should stay the same. I mean, as far as just the percentages go, okay. Again, unemployment rate neutral, just like the one we had today. And then, of course, the previous non-farm was bullish as well. But everybody can see from a mile away the dollar getting pretty darn strong right now. So I'm pretty happy about that personally, just because I still am in that pound dollar short. We'll take a look at that in a second. And then I wrote down 3 possible opportunities over the coming days for pound Kiwi, Kiwi CAD, and CAD Yen. So we'll take a look at a few of those items I was looking at. Yeah, my goodness. It's a hot ticket. Guys, one thing I stole from Nick is the 8 asset view. So I got to tell you, it's been really helpful just whenever these red folder events pop out. It's been really helpful to be able to take a look at these so that at a quick glance, you can see what that immediate reaction is for more of your risk assets. I mean, I like, me personally, when a report comes out, the first thing I want to know is it a risk on or a risk off move? Okay. So that's just me. That's me personally, but it is also a nice little visual to see, see what the reactions are for everything as a whole. So indices and Bitcoin on the left, you got your gold, silver, dollar index, and oil on the right. I just think it's a smart idea. I'm a thief, Nick. I stole it from you, but it is a very good concept. So yeah, dollar index, as you can see over here, this is a 5-minute chart. You can see where the release came out right here on this candle. Just been going to heading towards the moon while you get your risk assets getting a little bit of retracement over here. So not a whole lot of effect I noticed on oil relative to the other assets, but obviously gold, silver getting a little bit of a drop for the reciprocated version of the Dixie. So that is a look at that. When it comes to my trade, it had retraced overnight while I was asleep. So it wasn't really too far away for a minute to where I actually opened the trade. Had that nice drop yesterday. And again, it just kind of retraced itself overnight here in the States. But yeah, needless to say, when that report came out, I mean, it just screamed down. So trade overall is looking pretty good. If you kind of zoom out a little bit, 4-hour chart, you can see I still got my take profit down here. I'm sticking with it, ladies and gents. Will this potentially give it a little bit of an issue right here? Talking about this, I guess you could call it a double bottom. If we're just taking a look at this swing low here. If we clear that, we're home free. That's my opinion on this. So this is, for me, the next landmine, if you will, to see if we can't push through that. So it's well on its way now. Just go ahead, sink, take profit, and then let's get a deal after I take profit. Okay, a peace deal. That's what I want. But hey, the markets don't care what I want, but I'll take what they're giving me today. So it's unrealized at this point and a little over halfway home. So that's a look at that. And let's see here. When it comes to the assets, and guys, let me know if you have any tickers you want me to check out. Like I said, I'm going to look at pound Kiwi, Kiwi CAD, and CAD Yen. So those ones are on deck. If you have anything beyond that, let me know. Pound Kiwi on deck first. So with that one, I do believe it did move around. Now I'm looking at some of my alerts, and that's why I put those on the list, because they're not too far away from opposing zones that I'm keeping my eyes on. Now, pound Kiwi itself is actually neutral, but it's not too far away from bearish. So I would highly prefer that I get a -5 or lower score on the Edge Finder before I take this shot. But when it comes to the chart itself, it looks pretty good, I think. So if we go take a look at that, let's see what I was looking at. Obviously, this news today is surprisingly pushing the pound higher versus the Kiwi. So we're currently, as you can tell, in that supply zone confluence. Now, do I just want to hit the sell button right here? No. No, because we still have the lingering effects of the NFP out there. So definitely need to take a little time. I want to see a bearish close on this thing. Now, usually I would use a 1-hour chart, but because this thing is stretched pretty far, when we're talking swing low, swing high, I don't know. I may want to wait for next week, and I may want this thing to give me a bearish 4-hour candle close first. And again, if somehow we get a bearish score on Edge Finder, this might be my #1 short going into next week. I don't want to do it today because I feel like it's too close for comfort. And who knows what the heck could happen over the weekend, right? So the only reason I stayed in the pound dollar short was because at market close on this past Friday, it had already given me a pretty good buffer as far as unrealized profit. So I felt pretty good about it. And I'm glad I did at this point, but I don't want to short something right here with a stop loss this close and then have price gap above on the Sunday open and just ignore my stop loss. So that's why I always say, guys, me personally, I don't like opening my daily 4-hour trades on Fridays. I really don't, because they need a couple, 3 days usually to kind of work themselves out at least. But over the course of the week, if it goes in my favor and gives me a good 50, 60 point unrealized, buffer, okay, that's a little more comfortable for me to hold it open over the weekend. But brand new trades like this, I don't know. Okay, I just don't know. I'm not too comfortable with it yet, especially with all the fires that they're trying to put out between the Iran, Lebanon, Hezbollah, U.S. Triangle or rectangle or square or whatever you want to call it. So anyway, That's pound Kiwi, but I just overall like it. I mean, let's take a look at the daily over here. Okay, you can see we've had lower lows and lower highs, but the lows have really started to stretch. The low, the most recent low, dropped into a zone of demand, and that's where we got this sharp bounce down here whenever we did touch it. And I do believe that was what time frame was that? I think it was 4. Oh yeah, and that was a 2 hour, I do believe. So that was a little lower than the 4 hour. Anyway, it's in a very good spot right now. But again, I just want the shuffle of the volatility to kind of calm down a little bit from NFP. That's just really it, guys. It's a U.S. report. These are 2 non-U.S. assets, but obviously they're affected highly by the U.S. itself in general. So this is definitely going to be the number one asset I watch upon the Sunday open here in the States, Monday for you guys across the pond. So that is pound Kiwi. Kiwi CAD was another one I was keeping an eye on. Let's go take a look at that. So on Kiwi CAD, just kind of looking back at the history of this thing on the daily. So we got higher highs, higher lows. The most recent swing low broke a structure. Talking about this overhead supply that we had over here. Let's see if that's a 4 hour. Okay. So that right there is that's my way of seeing them. Do we have any underlying strength? You guys see me draw this up a lot. That basically turns this into my bullish impulse leg. Now, it didn't break the swing high. Okay. Talking about over here, it didn't break the swing high, but it broke a supply zone. So it's really either or. I would like it to break both and close beyond both, but if it breaks at least a zone of supply, then that's strong enough for me, guys. And it's a very big retracement down. So could it be overstretched to the downside? Well, that's why we have things like the RSI kind of help us out over here. 4 hour time frame over here. RSI is well under 20. And guys, again, 70-30 is your standard default. I use 80-20. So I'm looking for the more extreme moves. And as you can see, we're in a very extreme move on here. So all I'm asking it to do, and I think I drew this on a 6 hour time frame. Let me go change that to 6. Yeah. So when I drew this up on a 6 hour, again, I'll go to whatever time frame paints the prettiest picture. I'm not biased or married necessarily to any specific time frames. Now, daily 4 hour is my favorite. Okay. But if a 6 hour gives me a better look, great. If an 8 hour zone, if a 10 hour zone, I don't get crazy with like your odd numbers, 9s and 7s and 11 hour time frames, none of that. But I do go up to 6 hour from time to time. Again, and it's just whatever paints the prettiest picture. And you can make an argument that is giving me a zone as well. You can make an argument that we're in a daily demand as we speak. I need to turn on my magnet. Candle over here. Okay, that's currently where we're at. So we're inside of the daily as we speak. The daily, again, broke this structure, broke the supply zone. So higher highs and higher lows. We're in a daily. There's a lot of traders buying just because it touches the daily. And hats off to them. I just personally want it to touch, remember, at least 2 sets of eyeballs is what I want to see. So we got the daily eyeballs on it. They're smashing their buy buttons. And now I just need a set of 4 hour traders, or 6 hour in this case, so that I can actually pull the trigger myself. So for me, I'm waiting for price just to drop down a little deeper. And also, you see, I got my blue line going across the zone there. That's a former support resistance line from the past for possible buys. As always, guys, not financial advice. Definitely do your own due diligence, just like Nick says every day. But this is definitely my point of interest on Kiwi CAD. And speaking of that, let's have a quick look at the currency streets themselves. This is why Kiwi's at the top of the list. Okay, keep top of the list. So 71% tied with the Swissy right there. And the CAD is near the bottom. So if I'm just isolating the fundamental strength, so sentiment and technicals aside, just for a second, fundamentally, it's looking pretty good. It's exceeding expectations on the bulk of its report, talking about the New Zealand dollar, the Kiwi. And then the opposite side is Canada is down there pretty close to my personal bearish territory, which is really anything under 40%. But it's definitely a lot weaker than the Kiwi fundamentally. So I really, really like the opportunity. And as far as top setups goes over here on the Edge Finder, it's giving us a bullish 5. So it's just barely tall enough to ride the ride. But I personally heavily am influenced by the currency strength, the surprise index, guys. So definitely, if you guys don't have the Edge Finder, this is one of my favorite things to look at every single morning. And every single time red folder events come out, and then it usually takes a few minutes or so for everything to update the algorithm and such. But it's a real-time look at that overall strength. Okay, so really, really, really liking that New Zealand CAD opportunity going into next week. Okay, so that'd be another Sunday. And then lastly, for items I have on my watch list that are close to zones is CAD Yen. This one's a little bit squirrely, though. It's been kind of sideways for a while. It's just basically been in a sideways congestion for a while. So if we're looking at our MAs, our moving averages over here, the 8 is below our 21 EMA. As always, guys, the dark red is the 8. The light red is the 21. If I'm trying to short something, it's obviously all about the lower lows and lower highs. But mechanically, I want to see that relationship as well. Alligator's mouth opening to the downside. Okay, so we're good over here on the right, but at the same token, if you take a look at this thing, it's really not, it really hasn't strayed too far. It's about a 60, 70 pip range since mid-May. So it's just been in that 60 pip range. And the ATR on this thing is 60 pips. Well, 53.9 pips to be exact, but it's just going sideways. So what I think is happening, and I'm going to go to a single chart view now. What I think is happening is we're getting liquidity. We're getting stop losses up here. We're getting stop losses down here. So at some point, I want to see some type of sweeps of some of this liquidity. Now, I prefer to see it on the upside. So for these bears that are pushing price down, they've got buy orders up above. Okay, that's going to be their stop losses. So buy orders need to fuel sell orders if I'm a large bank or institution. Let's just come a little bit higher up and take the unfilled orders from the zone, 4-hour zone, or I guess that would be 2-hour. Did I do 2-hour on this one? Yeah, 2-hour zone. Oops. So 2-hour zone, 2-hour supply. Again, we collect the stop losses, which, by the way, they're putting their stop losses in the zone. Now, some of them may have a much wider range, but there's going to be a lot of stop losses here from these bears. Okay. And these bears as well. They probably put their stops here. Some of them probably pushed it up higher. And these bears here, okay, they're putting their stop losses above swing highs typically, right? So I want to see a sweep of that liquidity bounce into the unfilled orders for a possible short. So that is the third item that I'm watching next week, going into next week. So it's nothing I want to necessarily do right now. Go back to 4-hour. Nothing I want to do necessarily right now, especially on the one that's currently in the zone because of that, but also because I'm already in a pound short. So I don't want to really double my risk on the British pound. Okay, so now if both of these assets had hit zones relatively the same time, maybe I break up the risk. Maybe I share the risk between the Kiwi for the quote currency and the US dollar for the quote currency. And just do half and half, half a trade on one, half a trade on the other. That's obviously an asset if you want to spread the risk around among a couple of currencies. But the reality is pound dollar just so happened to be the only one in the supply zone at that point. So that's why I took it. And yeah, looking pretty good. So that's my 3. Let's get a pretty strong bearish close out of this. And then if I'm not out of the pound dollar trade, then that would probably be next. But if the pound dollar is dropping, this very likely could be dropping with it. Except, again, this one's kind of taking the opposite push. Pound dollar is obviously down, but pound Kiwi is up. So I don't know. I'm just gonna basically sit on my hands, stick with my pound dollar short, and let it be. So anyway, guys, let me know if you have any tickers. Let me take a look at the chat. Dixie to 100 today, hopefully. Digital content, yeah, hopefully. Again, just get me to take profit and then let them sign a dang deal. That's what I want to see. That's what we all want to see, so that we don't have to keep going back and forth between the positive headlines that are getting negated by the negative headlines. Deal or no deal. Okay. Bitcoin below 60,000 is imminent, says digital content. Possibly. Go have a look at Bitcoin. I don't really try to do a whole lot of long projections like that, deep projections, but clearly this thing's pointing down. There we go. 8's below my 21. We've broken a structure here. We've broken a structure here. This thing's just sinking. But it is down to a former set of zones. So let's go to a one chart look on this thing. And just remember, from a monthly time frame, okay, now we're all the way to the monthly chart here. This is my monthly demand zone, which we're currently chewing through over the last few months. Okay. So there's your monthly. Here's your weekly demand zone. If we step down to a weekly chart, talking about this candle here, this weekly is inside of the monthly. There's that alone is a pretty strong confluence. And same thing, you can see where we've gotten a reaction back here, back in early February. Okay, bounce, push up. Now we're retesting it again. And then, of course, dropping all the way down to a daily. Within the same area, we have a daily confluence as well. See how powerful this is, guys? Again, this is nothing more than getting multiple sets of high time frame eyeballs looking at relatively the same area. It's about a $2,000 range, okay, on the daily. This is a $2,000 range on the Bitcoin. On a $60,000 instrument. Okay. So that's a pretty decent range right there. So just kind of going back in time, and we can see where the daily is. Okay, so again, monthly, weekly, daily. In all those cases, we have gaps to the upside. Okay, push away, runaway gaps, runaway gaps, runaway gaps. That's what I like to see. And it's not too often you get all three large time frames to marry up like that. But when you do, it's beautiful. It's a beautiful thing. So if we can break the rest of this, who the hell knows where it's going? I mean, hell, it's at 60,000 now. But I would not be wanting to try to sell it any further. Absolutely not. Because we got to remember the rest of the zones. See, we're touching the daily a second time. Now, the first time, we went about 50% of the daily before we wicked back upwards. Again, back on February 6th, it looks like. So I would not personally want to be trying to buy, and I would definitely not want to be trying to sell because there are still technically unfilled orders underneath the wicks, within the daily, within the weekly, within the monthly. So just be careful in this whole zone, guys, this whole range. This whole range can mess a person up, whether you're looking at the monthly, the weekly, or the daily. If you break the daily, then I think you have a little bit more of a chance of pushing it down further. But that's only because if you break the daily, then you're breaking the rest of the weekly here as well. Because they've basically got the same distal line of their respective time frame demand zones. But yeah, you break that, and then now you're just dealing with the bottom part of the monthly. But then again, you got to remember, I drew up another daily zone. So we have another daily demand drawn up all the way down here. Okay. So that's another roadblock. So I don't know. I just personally, I'm not too excited about trying to buy. I'm not too excited about selling. I just want to sit on my hands. And oh, by the way, the edge finder is basically not giving us a signal anyway. Pretty well neutral. So that's Bitcoin. That's my thoughts on that. Euro Aussie, pound Aussie for you, Cobra. Yeah, let's go look at Euro Aussie and pound Aussie for you, and just double check over here as always. Euro Aussie, okay, not on our list. It doesn't look like, so pretty well neutral. But let's go look at the text. Euro Aussie, and just from a view over here, real quick. Euro, a little bit of strength. Aussie is obviously the weakest. And then the pound is pretty well neutral. The pound basically, yeah, it's basically where the dollar was just the other day. Dollar was at 50%. Now dollar's up at 70. But yeah, Aussie, pretty decent currency to try to actively sell for sure. Euro, just barely there. But it is there. Euro Aussie, let's go have a look. Now, when it comes to Euro Aussie, it's kind of going the wrong way in for my taste. Okay, I want to see... Well, I should say overall. Of late, it looks like it's kind of changing to the upside a little bit. And I might have talked with you guys about this the other day, but it basically created a little bit of an impulse leg up, a little bullish impulse leg. So because we had such a steep decline, if I were to try to buy Euro strength and sell the Aussie weakness, well, I would really want to see a break of the impulse leg and get a second impulse leg. Okay, so in other words, break this structure here. If we can break that structure up, well, now we've got a new impulse leg, which means we must have some type of underlying strength. You see, I had a supply zone drawn up. This is, again, the daily side, guys. And price just pushed right through it. So that's a good sign of strength right there. Let's go to a 1 chart view. Take a look at the 4 hour. Okay, there's our daily. Here's our 4 hour. I had a 4 hour zone I drew up here. The zone wasn't really that strong because it didn't really break and close below a swing low. As you can see, I've got an alert down here, 160, 167. I think that one was on our list, wasn't it? Wasn't it? I think this was bullish a while back. I want to go look, but anyway, that's why I have an alert here, because I was making my initial thoughts about making a play off of this first impulse leg that we discovered here, that broke this structure, broke through this supply zone I was watching at one point. So this is really the first sign of, hey, we're trying to take this giant oil vessel and turn it around. It's going forward. We're trying to turn around and go back. So that's kind of the first sign. It's not a guarantee, though. So that's why, personally, I want to see a second impulse leg. Because if we get another impulse leg, well, then now you've got 2 bullish ones in a row. That would make me feel a little more comfortable with trying to buy on a discount. I can delete that now. I can delete that. And then we just have to have a new, somewhere in here, we have to have a demand zone created. But I'll feel this will be my confirmation, as if we can break and close above that. Because I don't really think there's anything too great down here at the moment. I mean, if I'm looking at this 4 hour candle down here, maybe that's kind of a demand. It's not really the strongest, but it does have a little bit of strength behind it, but not a lot. So rather than take that zone there, for me personally, I would probably just wait for another sweep of liquidity. Okay, think about it. If we get that impulse leg, we've got stop losses hanging out right here from these buyers, all these buyers that stepped in to push price up, break this minor structure. Now let's just break the major structure and then get one big old liquidity sweep. That's what I'd like to see. Take the unfilled orders out of the way, or I should say the stop losses, guys. The sell orders, which are stop losses, to fill the buy orders, along with the unfilled orders from the demand, the confluence, the 4 hour daily confluence for possible buys. That's what I would be interested in. I think it would probably be a little aggressive because we had such a steep decline at just taking this first impulse leg buy. I'll feel a little more comfortable we get that second. So that's my thoughts on it. Now, if price just says, to hell with my second impulse leg request, and just comes down and just jumps into the zone, I would still consider it. I just won't be putting on a full risk. I'll just kind of limp into it, tiptoe in. And then here's the thing. If we do end up getting an impulse leg down the line, like if this line does in fact come into fruition, well, then maybe we can find another zone of demand along the way here and add to the position. So DCA in, dollar cost in. Maybe I do half a position here. And then when we get that impulse leg, this would be my second position. This would be the other half. Okay. So it's basically 2 positions. But the point is, I don't want to put a full risk down here. So this would be my way of getting the equivalence of a full position. But that's only after it proves to me that, hey, we've got 2 impulse legs. We might have something going here, but at the end of the day, we got to start looking at supply zones along the way. That one over here does have a gap, and see if it just presents any landmines, possible landmines. We got a long ways to go if we can chew through this. A little bit of equilibrium over there as well. So that's my thoughts on Euro Aussie. I would not want to be dollar cost averaging and adding, a couple full positions, but if it comes to half positions, absolutely. So that's Euro Aussie. What about pound Aussie? What about the other side? Probably got to be quite similar. Go double check our list over here. All right. So our 8 EMA is crossing to the upside. That's good. That's the alligator's mouth opening to the upside. We've got this kind of patch of equilibrium that we're kind of fighting right now. All this action over here. So that's a little bit of an equilibrium. I just want to get out of that. I don't want to be trading anywhere in this area. I want to trade extremes. I don't want to trade where the magnets are sucking people in together. Okay. The buyers and sellers are agreeing in here. There's no demand exceeding supply or vice versa. So we have pushed down and created from this equilibrium a pretty strong break. We broke a underneath confluence of zones, guys. So to me, it looks like we have some strength somewhere in here. Somewhere in here. And as you can see, I drew up on the left. What did I draw up? Now that we have the big picture look, going back to my one chart look, I had this 1 hour, or no, I guess this was a 4 hour zone I drew up over here. That ended up kind of being the launch pad, if you will, to kind of start this. We got a reaction from it. My goodness, time flies. We got a reaction from it, but nothing that was sustained. Of course, obviously, the NFP has kind of been fluttering with this as well. So, yeah, I think Euro Aussie would be my favorite one among the two. If we can get some help from the Edge Finder, if we can get some help. The British pound has been torn down lately, guys. It's not had the greatest readings, and just listening to some of the lip flapping sessions from their major leaders over there, they don't sound too happy, in my opinion. So anyway, I think there's better assets to trade outside of those, but hopefully that at least gives you a little bit of an understanding, especially the Euro Aussie. I do like that one just a little bit better. But again, that's the picture pretty much I need to see, guys. Half position here, break structure for a second impulse, maybe take another half to complete my one position. Ladies and gents, be careful out there. Be safe. Let this stuff kind of wind down a little bit and show its hand as far as the volatility with the NFP results and the volume especially, and pick a trend at that point. So take care. We'll be back and do it all over again on Monday. And with that, have a great day. Talk to you later.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.